but we need confirmation that inflation is contained. For equities, I would not stop at the index-level move. The first move in futures was apparently positive, led by Nasdaq, and that makes sense if yields are dropping. But the real test is breadth. Are small caps participating? Are banks participating? Are consumer discretionary names participating? If the rally is mostly mega cap duration and defensives, that is a very different signal than a broad cyclical rally. Small caps are especially important here because they are more domestically sensitive and often more exposed to floating rate debt and tighter credit. If the labor data is weak and small caps cannot rally even with lower yields, that would tell me the market is more worried about growth than excited about the Fed. The Russell 2000 is really the tell for this kind of setup. In a clean soft landing trade, you usually want to see more than just the Nasdaq working. You want small caps, regional bank proxies, transports, and equal-weighted measures to improve, because that means investors are looking through the slowdown and seeing easier financial conditions ahead. But if the Russell lags while the Nasdaq leads, the message is more cautious. Lower yields are helping long-duration winners, but credit-sensitive and economically sensitive companies are not getting the same vote of confidence. That distinction matters because market cap-weighted indices can hide a lot. The S&P can look fine, while the average stock is dealing with tighter margins, slower demand, and higher refinancing costs. Oil is the wild card that keeps this from being a simple Fed pivot story. If geopolitical tension around the Strait of Hormuz keeps crude elevated or creates a supply shock scare, that can feed back into headline inflation, transportation costs, and consumer purchasing power. Higher gasoline prices act like a tax on consumers, especially lower and middle-income households. For the Fed, energy is tricky because they typically look through temporary energy spikes, but they cannot ignore it if higher energy starts bleeding into expectations or core prices. So the labor report may argue for easier policy, while oil risk may argue for caution. That is the messy macro mix. Growth cooling on one side, inflation vulnerability on the other. One assumption I want to challenge is the idea that weaker payrolls are automatically bullish because they bring rate cuts closer. That can be true at certain points in the cycle, but it is not a law of nature. If earnings estimates are too high, if consumers start retrenching, or if credit losses rise, then lower rates may not fully offset the growth damage. The market has been willing to pay up for quality growth because cash flows are durable and balance sheets are strong. The vulnerable areas are more likely to be highly leveraged businesses, discretionary retailers, lower quality cyclicals, and speculative companies that need capital markets open. I am not making a trade call there, just saying the macro filter becomes more important after a report like this. So, my bottom line is this. The July payroll report looks like a meaningful cooling signal, not just because of the 23,000 job decline, but because the prior 2 months were revised down by 103,000. The unemployment rate falling to 4.1% is less comforting if participation fell at the same time. Lower yields can absolutely help equities, particularly the Nasdaq and longer duration assets, but I would watch breadth before declaring victory. The confirmation checklist is pretty clear. 2-year yields for Fed expectations, 10-year yields for growth and discount rate pressure, Russell 2000 participation for breadth, banks for credit confidence, consumer discretionary for demand, and oil for the inflation wildcard. The next inflation and claims data will matter a lot, because this report shifts the debate, but it does not settle it.
Thanks, company desk. All right, markets desk is back on the movers board, and this thing is still loaded. Index tape is green but not clean. QQQ up about 3/4. IWM strong 2. VIX still sitting over 20. Breadth mixed. So yeah, the market's giving risk room, but it's not a free-for-all. Top of the board, MB, almost a 4-bagger now, up 293%, and the relative volume is just silly, over 4,000 times normal. NAMI still sitting second, but we already know that one's been a fast money fight. Docs, much bigger and cleaner, still up 90%. Then DSY and HCWC rounding out the heat. So the question here is simple. Which of these are actually holding bid into the open, and which ones are just pre-market air pockets waiting to rug? Let's go straight to MB. Top gainer, 1-minute chart. Oof. This is why we pull the chart and don't just stare at the percentage column. Price is around $14.75, up 293%, with 16.4 million shares traded against an average volume under 4,000. That's not elevated. That's a totally different stock today. Float listed around 4.7 million. So yeah, when volume is 3-4 times the float pre-market, candles can get nasty fast. Companies a Hong Kong restaurant group, Taiwanese hot pot, barbecue, not a mega cap story. This is flow and squeeze mechanics. For the tape, I'm marking 1450 as the first pressure line underneath. If it starts accepting below there, that tells me the buyers are losing control. Above 1525, different conversation. That would show the bid is still pressing. Not a recommendation, just the scoreboard. On a runner this extended, the level matters more than the headline.
Thanks, Markets Desk. All right, bell is live. Let's do the opening bell macro read. We're 6 minutes into cash trade, and the first message is pretty clear. Growth has the wheel, but volatility did not leave the building. SPY sitting around 771.18, up 0.34%. QQQ is the leader at 721.4, up 0.94%. So NASDAQ is still the mood ring for risk appetite this morning. Russell's green too. IWM 300.17, up 0.64%. But that 300 line matters because small caps above 300 feels constructive. Below it gets a lot messier fast. And then there's VIX at 20.32, actually up a touch. So yeah, stocks are green, but the insurance market is still charging weekend prices at a hotel bar. The QQQ levels from the open are still the map. 723.75 is the upside high to reclaim. 720.25 is the little shelf I don't want to see crack if this growth bid is going to stay clean. Now, the first movers out of the gate are loud, not subtle, not polite, very opening bell. MB is still the rocket on the board, up about 224.8%, around 12.18, with absurd relative volume. NAMI is up 166.3%, around 7.75. HCWC is up almost 91% at 38 cents, and DOX is the cleaner institutional-style gapper, up 79.8%, around 37.15. Red side, PN is down 67%, CVRX down 53%, WYHG down 42%. So the tape is basically saying, we'll pay up for catalysts, but we are not forgiving broken stories. Macro backdrop explains why the bid has room, but not a blank check. Bonds are green, TLT up 0.31%, IEF up 0.35%. The dollar proxy is down 0.41% at 28.075. Yen is firmer. Gold is ripping 2.5% to 399.41. Oil is lower by 0.88% to 117.82. That's a softer dollar, lower rate feel helping duration and growth, while gold is over there saying, cool rally, I still brought a helmet. Crypto beta is participating too. BITO up 1.49%, Coin up 3.16%, NSTR up 5.48%. Okay. Now stitch the whole board together because this is the risk thermostat right here. Bonds are bid. TLT up about 0.3, IEF up about 0.33%, so rates pressure is easing a little bit. Dollar's softer at 28.075. Yen is firmer. Gold is absolutely alive, up 2.5%, and oil is down almost 0.9. That combo is why growth can lead early. Softer dollar, bonds not fighting you, oil not squeezing inflation fears. Crypto beta's catching a bid too. BITO up about 1.5, Coin up 3, MSTR up 5.5. Just remember that side of the board moves fast and it's volatile, so don't treat that like a sleepy macro tell. Now on QQQ, the level is super clean. 723.75 is the morning high. That's the breakout ceiling. Underneath, I'm watching 720.25-ish as the first real gut check area. If they hold above that, this is still digestion, not a rug pull. IWM reclaiming and holding 300 matters for breadth. VIX is still above 20, so it's not full green light calm, and the dollar proxy right at 28.075 is the little tell. If that keeps leaking, it helps risk. Big timestamps, 12:30 Eastern payrolls, then barking at 2 o'clock, so don't fall asleep after the open. All right, macro map is set. Let's kick it back to the movers board and see where the real juice is hitting.
Thanks. Macro desk, quick tool check while the tape is still hot. This board right here, this is Pro Terminal. It's how the market's desk is keeping score in real time. Top gainers, top losers, price, percent move, relative volume, the whole board. MB at the top, NAMI still wild, DOCS still on the list. And the key thing is, this is not a buy signal board. It's a research board. It tells you where the volume is. Then you go do the work. Now this is the page I care about when a small cap starts doing cartoon numbers. Dilution, sir. Oof, this matters. Shelves, ATMs, offerings, that stuff can change the entire risk profile of a runner. So when something is up triple digits, I don't just stare at the candle and get excited. I want to know, can they sell stock? Is there paper overhead? Is there financing risk? That's the difference between watching momentum and walking blind into a trap. Same idea on the company page. Pull up a name, hit filings, and now you're not guessing. You can actually read what the company filed. Then flip insider trades. Same workflow. Is there buying? Selling? Nothing there? Fine, but at least you checked. Here at the markets desk, that's the whole point. Chart first, volume second, filings right behind it. Educational stream, obviously. Nobody's getting told what to trade. And then we go right back to the tape. 1 minute terminal chart. Candles, wicks, volume bursts. This is where the move either confirms or starts fading. Look, everything you've seen us use this morning. Movers, charts, filings, insider activity, dilution risk. That's Pro Terminal. If you want to run the same workflow on your own screen, go to proterminal.io. Coming up, we're snapping right back into the market mover scan because this board is still moving.
All right, markets desk back on the movers board. Let's separate the real heat from the trapdoors. Look at this board. The indexes are greenish. QQQ up about 0.8, IWM pushing almost 1%, but these single name moves are in a totally different universe. MB is still the headline, up 269% at 1385. NAMI still huge, up 168. HCWC sub-dollar, up 106 with almost 248 million shares already. Then the other side of the tape, PN is getting smoked, down 64%. So yeah, this is not a boring open. This is a momentum board with landmines. We're going ticker by ticker, 1 minute charts, no fluff. Start with MB. Oof. This is the one everyone keeps refreshing. 1385 now, still up almost 270%, and the volume is just stupid. 17.2 million shares against a normal day under 4,000. That's not a typo. Tiny float too, about 4.7 million. So every aggressive buyer and every trap short shows up immediately in the candles. The key for me right now is simple. Can it reclaim 14 cleanly, or does it keep rejecting under that round number? If MB gets back above 14 with real prints, the squeeze is still alive. If it starts losing 1350, that tells you the bid is backing off, and the air pocket risk gets bigger. And remember, we already got paid on the scoreboard earlier with that downside break. Now we're watching whether it stabilizes or turns into another lower high fade. Now flip to NAMI, because this is the second insane volume name on the board. 35 million shares, up about 169%. And yeah, this is a squeeze-style tape, but don't ignore the other side of it. High dilution risk is sitting right there. So on the 1 minute, I'm not chasing the headline number. I'm watching the reclaim. If it can keep accepting above that $8 area with volume still coming in, okay, that tells you buyers are still pressing. But if 8 keeps rejecting and it starts leaking back toward the mid-7s, that's where these parabolic moves can get ugly fast. Big move, big liquidity, but this is exactly where follow-through versus fade shows up candle by candle. HCWC next. Totally different lane, but same kind of retail radar. This is a 41-cent stock, up 106%, and the volume is just ridiculous. Almost 248 million shares. Sub-dollar, packaged food name, high dilution risk. So this is not one where I'm pretending it's clean. On the 1 minute, the round numbers matter a ton. 40 cents is the battleground right now, and then 50 cents is the obvious psychological spot if buyers keep showing up. What I don't want to see on a runner like this is VWAP fail, reclaim attempt fail. Then candles start stacking lower highs. That's usually the trapdoor look. If it's real momentum, volume needs to stay heavy, and it needs to keep reclaiming those round number shelves, not just spike and fade.
Thanks, Markets Desk. Quick Stock Whisperer check-in on the simulated paper book. I just opened NVDA long, 45 shares, average price 222.124. It's sitting around 222.16 right now, so basically flat, up about $1.60 on the position. Here's the setup. NVDA is pushing near record highs on fresh AI demand optimism, and the QQQ is leading the tape, up about 1%. So this is a defined risk momentum starter, not me chasing a random candle. The risk is already bracketed. Stop is down at 216.40, take profit order is up at 233.50. The cleaner confirmation level for me is 224.50. I want to see that area hold as acceptance, not just a wick. Rest of the simulated book is quiet. AAPL is long 40 shares from 312.14. Trading 311.93, down $8 and change. Small red. Thesis still has to prove itself around that services AI pivot, and 318 is the confirmation level I'm watching. MSFT is long 20 from 503.90, trading 503.94, up 80 cents, basically unchanged. Below 499 would be my warning that the opening range bid is fading. Orders tab shows the brackets are working, so no loose positions here. Cash is about 53.9K. That's the whole point of this desk. Thesis level, defined risk, simulated paper account, not a copy this signal. Coming up, we'll kick it back to the movers scan. Thanks, Stock Whisperer. Let's stay with the names where the story is actually moving the tape, and pull up Doximity. This is the earnings reaction that matters this morning. The headline is an AI-driven Q1 fiscal 2027 beat, raised revenue guidance, and at one point the stock was tagged as up nearly 80%. Live movers data has it still up about 61%, around 33 and change. So yeah, not a normal earnings pop. Here at the company desk, the question is simple. What does this actually change? Okay, now put the story next to the chart. The market's green. QQQ up almost 9/10, IWM up 8/10, but DOX is in a totally different universe today. That's relative strength, but it's also post-earnings gap risk. When a stock gaps this hard, the first job is not to worship the headline. It's to see whether real buyers keep showing up after the first emotional wave. The mover's feed has relative volume around 6 times normal, so the reaction has participation, not just a sleepy markup. But this kind of gap can get very two-sided fast. Early buyers defending the move, late chasers getting tested, and anyone short into the print potentially scrambling. The business read is the interesting part. Doximity is not just being rewarded for beating a quarter. The market is reacting to the idea that AI engagement is turning into guidance power. That's the key distinction. A clean earnings beat is nice. Raised revenue guidance says management is seeing enough demand or enough visibility to lift the forward bar. And with Dox, investors have been waiting to see whether AI is just a feature story or whether it can actually drive usage, advertiser interest, and monetization across the physician network. The skeptical read is still important though. One quarter doesn't prove a new growth regime. Big gaps often price in a lot of future execution in one morning. So the company desk lens is, the print improved the narrative, but now the stock has to live with much higher expectations. So, the clean takeaway on Dox. This is an earnings gap with a real catalyst behind it. AI engagement, a beat, and raised guidance. But the trading question is whether the gap can digest instead of turning into a fade. I'm not treating a beat as a magic signal. I want to see how it behaves after the first hour, especially with payrolls still sitting out there at 12:30. If the broader tape stays firm and Dox keeps holding attention, it stays on the earnings board. If volume dries up, different story. Coming up, we'll kick it back toward the movers board and see which of these opening drive names are still holding up.
Thanks, company desk. All right, markets desk back on the movers board. Tape is green, but not clean. SPY up 0.4, QQQ up almost 1%. IWM firm, VIX still over 20, so these single name moves are not just market beta, they're their own little cage fights. MB is still the monster. 1595, up 325%, 17 million plus shares, and the relative volume is just stupid, over 4,300 times normal. NAMI is second, still up 169%, but that one's already been a squeeze and fade battleground. HCWC, sub-dollar, almost 280 million shares traded. And yep, it already tagged that below 40-cent warning we had on the board. PN is the red disaster, down 67%, and DSY is sneaking into the top 5, up 65%. We're going chart by chart now. No wasted motion. Let's pull MB first, because this is still the scoreboard leader. All right, 1 minute chart up. Here's the thing. At 1595, the percentage move is almost irrelevant now. Up 325% is already chaos. What matters is whether it can actually build above 16, or if every push through that line just turns into Wick City. Oof, watch that upper area. Float is about 4.7 million. Volume is 17.3 million. So this has churned the float multiple times already. That's why the tape can snap both directions. For me, the market's desk level is clean. Above 16 needs acceptance, not just a quick poke. Below 15.25, that earlier breakout starts looking tired again. So MB above 16 is the squeeze check level. MB below 15.25 is the fail check level. Huge move, tiny margin for error. Now, NAMI. And this is exactly why we put those lines down early. 1 minute chart up. This is sitting around 7.84, still up about 169%, with 36 million shares through it and more than 600 times normal volume. We had 8 as the reclaim and 750 as the line where the tape starts getting sketchy. And look where it is, right in the middle of that box. Back above 8, okay, momentum can try to take control again. Lose 750, and that's not just a dip anymore. That's the fade starting to confirm. Quick risk check though. ProTerminal has dilution risk tagged high here, so I'm not getting romantic with this one. It's level to level, super tactical, especially with this kind of volume spike.
Thanks, Markets Desk. Breaking news here. ProTerminal's newsroom is tracking a stock rally driven by fresh AI optimism. The headline is simple. U.S. stocks are pushing higher, semiconductors are rebounding hard, and the AI-linked growth trade is back in the driver's seat. What we know, The bid is showing up in the tech-heavy part of the market, with QQQ around 721 and up about 0.9%. What we don't know yet, whether this turns into broad market participation, because breadth is still mixed and VIX is still sitting above 20. So yeah, the rally is real on the screen, but the market smoke alarm hasn't taken the day off. Next headline. NVIDIA beats earnings estimates. The desk is seeing results well above analyst expectations, with demand for GPUs still the core engine behind the story. Why it matters. NVDA is not just one stock in this tape. It's the weather system for AI hardware, semis, and a chunk of software sentiment too. When the leader validates demand, it gives the whole AI complex permission to breathe. The caveat, and it's an important one, this is still a very crowded theme, and fundamentals have to keep catching up to the enthusiasm. In macro terms, AI is doing the heavy lifting today. Hopefully, it's stretched first. And the macro headline underneath it, the Federal Reserve holds interest rates steady. No change on rates, which reinforces the idea of stable borrowing costs for now. And that matters because long-duration growth stocks care a lot about the discount rate story. You can see the cross-asset echo without overcomplicating it. Bonds are firmer, the dollar proxy is around 28.08 and lower on the day, while gold is up sharply. The next data hurdle is still payrolls at 12:30 Eastern, estimated at 80, with unemployment expected at 4.2. Coming up, we'll flip back to the mover scan and see which names are actually holding the bid after the headlines. All right, quick pro-terminal news brief. Let's hit the wires and connect the dots. Top story, Doximity shares surge on an AI-driven earnings beat and raised guidance. The stock had been up nearly 80% on the headline and is still around 32.70, up roughly 58% on our tape. The facts, 7% revenue growth, better full-year guidance, and management pointing to stronger engagement around its clinical AI assistant. Why it matters? This is the market paying for AI adoption outside the usual chip and cloud sandbox. Here at the macro desk, that's the important part. AI is becoming less of a sector and more of a weather system. Next up, Apple faces a pretty pivotal September. ProTerminal's newsroom is tracking the iPhone 18 launch, Apple's first foldable phone, a new Siri update, and a CEO transition, all landing while the street keeps asking whether Apple is moving fast enough on AI. Why investors care? Apple's growth profile is still being judged against a very large valuation, and the market is rewarding clear AI execution right now. With QQQ near 720.9, mega-cap tech is getting the bid. But Apple has to prove it's not bringing a pocket calculator to an AI knife fight. Third headline, Michael Burry exits Microsoft and Oracle positions, but retains the Palantir short. The desk is seeing a reshuffle here. Bullish Microsoft position closed, bearish Oracle position closed, Palantir short still in place despite PLTR's strong run. Why it matters. This is not a trading signal by itself, but it does capture the argument sitting under the whole AI tape. One camp says earnings power is catching up to valuation. The other camp says the multiple is doing too much cardio. With VIX still over 20, that debate can move prices fast. Clean energy headline now. PN Smart Energy completes the acquisition of Manjing Sesson Power, pushing further into an independent power producer strategy. The strategic point is straightforward: more clean power footprint, more exposure to renewable infrastructure, and potentially a different revenue mix over time. The market point is less tidy. PN is around 3.05 on our movers tape and down hard today. So the headline and the price action are not exactly singing harmony. Investors will be watching integration risk and clean energy regulation here. And last one in this brief, Healthy Choice Wellness files the definitive proxy for its merger with Host Digital Infrastructure and sets up a special stockholder meeting. That matters because this could reshape what HCWC actually is, not just what it sells today. The stock's around 41 cents and has been a big mover. So the vote, Deal structure and execution risk all matter more than the headline pop. Tiny names can change personality very quickly, like a small dog with a leaf blower. Coming up, we'll kick it back to the movers board and see what's actually holding after the first burst.
Thanks. Macro desk. All right, markets desk is back on the movers board, and this thing is still cooking. QQQ's green, IWM's green, but VIX is still above 20 and breadth is mixed, so this is not a clean everything rips tape. This is pockets, stock picking, momentum. MB is still the monster. 1975, up 426% with 17.6 million shares traded against basically no normal volume. Oof. NAMI's next, 665, up about 129. HCWC still parked around 40 cents with 300 million shares. That is pure penny stock chaos. YJ and DSY are still on the gainer side too. We're going chart by chart now. MB first. Pull the 1 minute. This is the kind of chart where the percentage move almost stops meaning anything. Up over 400%. 4.7 million share float. Relative volume over 4,000. That's not normal interest. That's a full tape event. The whole number fight now is $20. If MB can actually accept above 20, not just wicket, that keeps the squeeze crowd interested. But if this slips back under 1850, that's where the move starts looking more like exhaustion than clean continuation. And look, with a tiny float like this, the candles can get ugly fast. Great board read, dangerous execution environment.
Thanks, markets desk. All right, macro desk time. Let's pull the camera back from the small cap circus and look at the whole tape. This is a very pre-payrolls kind of market. Stocks are green, but not exactly carefree. SPY's around 771, up 0.3%. QQQ is stronger at 719, up about 0.6. IWM is up about 0.75% at 300 and change. So the riskier side of the equity market is actually getting a bid. But here's the seatbelt. VIX is still sitting 20.34. And it's green too. That's not panic, but it's not beach chair complacency either. It's the market saying, yeah, I'll take the rally, but I'm keeping the receipt. Payrolls hit at 12:30 Eastern, and with the Fed already parked on hold, the data now decides whether that hold feels comfortable or awkward. Now the cross-asset tape is where this gets interesting. Bonds are bid. TLT up about 0.35%, IEF up 0.36%, so yields are leaning softer through price action. The dollar's down, UUP around 28.08, off almost 0.4%, and the yen proxy is up 0.5%. That combo is usually a little oxygen mask for growth stocks, crypto, and anything duration sensitive. And yep, crypto proxies are acting like they got the memo. BITO up 1.26%, Coin up 3.58%, MSTR up 6.82%. But gold is the weird cousin at the barbecue today. GLD is up 2.52% to 399.48, while equities are green. That tells me this isn't pure risk-on confetti. Some of this is dollar weakness, some of it may be pre-data hedging. Oil, meanwhile, is softer. USO 118.16, down 0.6. So crude is not adding an inflation jump scare this morning. If you only trade US stocks, you still care about that dollar-yen bond gold chain. That's the plumbing underneath the pretty candles.
Thanks, Macro Desk. Quick pit stop, because everything we're using on this show is sitting right here inside Pro Terminal. This movers board is where the markets desk lives in the open. Top gainers, top losers, price, relative volume, the whole tape. And the key thing, it's not a buy button. It's a research board. You see MB lighting up, you see the volume, you see the move, and then you go verify the story instead of just chasing a green candle. Then boom, one click, we're on the chart. This is why I like it for live tape reads. You can pull up the 1-minute terminal chart. Watch where volume actually hits. See the wicks. See whether a move is holding or just doing that nasty open drive fake out. Oof, look at that. That's the kind of structure we keep reacting to all morning. Again, educational stream. not telling anybody what to do. But if you're trading fast names, you need the chart, the volume, and the context in the same workflow. And this part matters even more on small caps. Dilution. We talk about this constantly because a runner can look amazing on the candle. And then the filing history tells you there's shelf risk, ATM risk, offering risk. All the stuff that can change the complexion of the trade. ProTerminal's Dilution Center is built for that. It doesn't magically remove uncertainty, and some data can be delayed or incomplete, but it puts the risk right in front of you, instead of making you dig through 10 tabs while the stock is moving. Last piece, the profile pages. Filings, news, insider activity. This is where you check the why behind the move. If a name is ripping, I want to know. Was there a fresh 8K, a prospectus, a proxy, insider buying, insider selling, or is it just pure momentum? That's the whole pitch. Movers board, live charts, dilution work, filings, insider trades, one research stack. If you want the same setup we're using here at the markets desk, go to proterminal.io. Coming up, we're right back to the movers scan.
Thanks, Markets Desk. Let's bring it over to the Stock Whisperer paper account. All right, this is the simulated $100,000 broadcast portfolio, not a copy this account. And the first thing I want to say is simple. I'm not forcing a trade here. The indexes are firm. QQQ's green, IWM's green, but breadth is mixed, and VIX is still hanging above 20. So that's not the clean, everyone's in the pool risk on tape. We've got 4 open longs, all inside defined brackets, and right now the decision is review, grade, and wait for actual triggers. Start with AAPL, because this one is basically a non-event right now. Long 40 shares from 312.14, marking 312.13, so we're down 40 cents total. Flat, effectively. That's exactly the kind of position where the Stock Whisperer does nothing. No thesis change, no emotional adjustment, no bracket move, because it's down a penny from entry. It's just sitting there as a liquid large cap sleeve while we wait for the tape to make a decision. MSFT is the one I'm watching closest. We're long 20 shares from 503.90. Current mark is about 501.50. Unrealized down roughly $48, about 0.5%. Earlier, our 499 warning level did get hit, and I'm glad the scoreboard caught that, but price is back above it now. So the read is not panic. The read is that level matters. If MSFT loses 499 again and stays heavy, that tells me the AI bid is losing the opening range, and I need to respect the bracket. For now, no new action. I'm not adding into a warning signal, and I'm not closing just because the first test got noisy. NVDA is almost perfectly flat in the paper book. Long 45 shares from 222.124. Current price, 222.066. Unrealized, down $2 and change. That's nothing. The thesis was momentum after the earnings strength, but the trigger I actually care about is still above 224.50. Until NVDA gets through that with follow-through, I don't want to pretend it has broken out. This is where discipline matters. I'd rather miss a little bit of an early wiggle than chase a name before the level confirms. DOX is the highest beta piece in here today, and I'm grading it carefully. Long 300 shares from 32.636, current mark 32.47, down about $50, negative 0.5%. The company desk already walked through why the stock ripped. Earnings, AI momentum, guidance. But for this book, the key is whether the post-earnings gap can digest without rolling back into the gap. I like that the loss is still controlled. I do not like chasing more size into a stock that already had a monster headline move. So again, position stays bracketed, no fresh order. Now the watch list. NVDA above 224.50 is still the clean follow-through trigger. MSFT below 499 is still the warning line. PLTR above 169 is the other one I'm tracking if QQQ leadership keeps pressing and the AI basket starts moving together again. But notice what's not on the trade ticket. The ultra-hot low-float movers, MB, NAMI, YJ. They're incredible tapes, but they're extended, fast, and very easy to chase wrong. Here at the Stock Whisperer, if the level isn't clean
and the risk isn't defined, I don't need the trade. So the decision ledger is clean. AAPL flat, MVDA flat, MSFT slightly red and on watch. DOX slightly red after the gap. No new trade, no close, no bracket adjustment from me right here. We'll let the levels do the talking, especially with the macro events still ahead. Coming up, the market movers scan picks the tape back up.
Thanks, Stock Whisperer. Markets Desk is jumping right back to the movers board. All right, look at this board again. Indices are green but not clean. SPY up about a quarter, QQQ up almost 0.6, IWM leading a bit, and VIX is still sitting above 20, so this is not some sleepy tape. MB is still the monster on top, up 268%, but the key now is it's come way off that earlier momentum zone. HCWC, NAMI, YJ, still lit up. Then VATE pops onto the fresh watch list for me, up 59%, 114 times relative volume. That's the one where I don't want to just read the percent move. I want to see if the 1 minute actually has buyers or if it's just a headline candle with no bid behind it. Let's hit MB first. 1 minute chart, no victory lap, just scorekeeping. This thing is still up 268% at about 13.82, 18.4 million shares traded, and the relative volume is just ridiculous. Over 4,600 times normal on a 4.7 million share float. But here's the part that matters. The earlier momentum fail levels did their job. We had that 1850 area flagged, then the 1525 break hit, and now it's under both. Oof, look at that. So for the markets desk, the tape is simple here. Above 14 is the first reclaim attempt, below 1350, and this starts looking like another air pocket flush. Not a name to get romantic with. Tiny float, huge move, fast wicks. HCWC next. And this is a totally different animal from MB. We're talking 46 cents, up about 130%, and the headline number is wild. 343 million shares traded. So on a 1 minute chart, I'm not asking, is it green? Obviously it's green. I'm asking, are the pullbacks getting bought with real volume? Or is this just churn where every pop gets fed? With a $9-ish million market cap and the dilution risk marked high, this is penny stock battlefield stuff. If it can keep accepting above roughly 45, okay, there's still a bid trying to defend it. But if 45 starts turning into resistance, that's where this kind of chart can get ugly fast because the volume is enormous and everybody's crowded in the same doorway. Now, NAMI, quick scoreboard check here because that 650 area was already the line we cared about. It's sitting right around 648, up 122%, with 38.7 million shares and more than 700 times relative volume, so there's still a ton of attention on it. But the tape is pretty simple. If it reclaims 650 and actually holds above it for more than one little candle, that's strength. If it keeps wicking through 650 and closing back underneath, that's not a reclaim, that's supply. So I'm watching the bodies here, not just the print. Above 650 with volume is a different look. Below it, this is still fighting the same seller. YJ now. This one's a little quieter than the top three, but don't sleep on the relative volume. Yunji, social commerce ADR, sitting around 252, up about 105%, and the volume's only about 437,000 shares. So yeah, way lighter than MB or HCWC, but it's still 82 times its normal tape. So the whole read here is 250. That's the pivot. If this can stay accepted above 250, it's showing buyers are still defending the breakout zone. If it keeps snapping back under 250, then it starts looking more like a thin ADR pop where every little push gets sold. Market's green, small caps are green, so the backdrop isn't fighting it. But with this kind of liquidity, the level matters way more than the headline percent move. VATE next, and this one's cleaner for a squeeze read. Innovate, Industrial's name, around 1177, up 59%, and the important part, 7.1 million shares traded on a 4.1 million share float. That's the kind of setup where you ask, okay, is this real pressure or was it one candle and done? Relative volume's 114 times normal, so there's definitely a tension here. For me, $12 is the obvious upside check. If it keeps tagging 12 and rejecting, that's sellers showing up. If 12 starts holding above, different tone. On the downside, I'd be watching roughly 1150 as the higher low area. Lose that, and this can go from squeeze structure to fade structure pretty fast. Not a prediction, just the tape map.
Thanks, Markets Desk. Breaking Fed headline first. ProTerminal's newsroom is tracking comments from San Francisco Fed President Mary Daly, saying risks to the U.S. economy are mounting, while employment is near what she called full stretch. Here's what we know. The message is caution. Labor is tight, the economy still has pressure in it, but the risk picture is getting less friendly. What we don't know yet is whether this is a one-off tone check or part of a broader Fed communication push. And no, we're not turning that into a rate call fortune cookie here at the macro desk. The market read is pretty clean. SPY's around 769.7, QQQ 716.8, both still green, but VIX is 20.31, still above that 20 line we flagged earlier. So equities are saying, fine for now. Hedges are saying, keep the umbrella in the car. Next headline. Oil is catching a bid on OPEC plus supply cut talk. The actual fact pattern is simple. The desk is seeing renewed discussion around possible output restraint, and that's giving energy names support while also poking the inflation bear, which frankly was trying to enjoy one quiet Friday. Why it matters? Higher crude can help producers and the energy sleeve, but it can also squeeze airlines, transports, chemicals, retailers, anyone where fuel or freight touches margins. One wrinkle on our screen, the oil proxy we're tracking is still around 118.32, slightly red on the session. So this headline is important, but the tape hasn't fully stamped it as a clean breakout yet. And third, NVIDIA shares are under pressure after an SEC subpoena tied to AI-related disclosures. Important distinction. A subpoena is not a finding of wrongdoing. It does, though, add regulatory noise right into the most crowded market story on the board, AI infrastructure. That matters beyond just NVDA, because semis have been the leadership engine for Q2. And when the leader gets a governance or disclosure question, the whole group usually gets a quick valuation gut check. So the macro chain is pretty neat today. Fed caution keeps VIX sticky. Dollar weakness has gold firm. Oil headlines raise inflation sensitivity. And now AI leadership gets a regulatory speed bump. Coming up, the markets desk is back on the movers scan, and I want to see if small cap risk appetite is still ignoring all of this, like it left its phone on silent.
Thanks, Macro Desk. Let's hit Amazon, because this is the mega cap chart with the cleanest relative strength red right now. AMZN is around 275.42, up a little over 1%, while QQQ is only up about 0.3 and SPY is barely green. So yeah, this is leading. Daily chart first. Big run from the low 200s into that 287 area, and now it's doing the classic mega cap pause. Not dead, just digesting. Tight candles, less sprint, more range. Here's the daily scorecard. Trend is still strong. Price is above the 20, the 50, the 200. Buyers have owned the bigger structure. RSI is elevated around 65, so it's not washed out. It's already had a big move. And the volume story matters. The earlier rally legs had real confirmation, including those huge volume days on the push higher. But right now, recent volume is lighter. That tells me the daily is pausing. 2 levels for the markets desk. 280 above is the range acceptance spot. If AMZN starts living above 280, that changes the tone. Below, 270 is the daily support line. Lose that, and this turns from healthy digestion into a more serious pullback setup. All right, let's drop down to the 1 minute. Oof, look at that expansion. Early tape was sleepy. 274.20, 274.80, chop, chop, chop. Then it flushed toward 272.12, snapped back, and the real candle came through, roughly 273 to above 274.50 on huge volume, over 880,000 shares on that burst. That's not random noise. Then buyers kept leaning on it through 276 with multiple 200K plus volume bars, all the way to 277.86. Now, the important part, it pulled back, but it's still basing above 275 and still above the breakout zone. For intraday structure, 274 below is the line. If 274 breaks, the breakout loses shape. If it holds, AMZN is still acting like a leader versus this mixed tape. Quick catalyst check here too. The fresh company tape has AWS in the AI lane again. Superblocks and AWS talking Amazon Bedrock collaboration, and the recent Q2 release had net sales up 20% to $200.6 billion. That's why this name keeps getting mega cap attention. Retail, AWS, ads, AI infrastructure, all in one ticker. There are also consumer lawsuit headlines on the feed, but the chart is not trading like panic today, so the market's desk read is simple. Relative strength, daily range, intraday breakout now cooling. Watch 280 above, 274 below. Coming up, we'll flip back to the movers board and see where the fast money is rotating. All right, market's desk back on the movers board. Let's see what's still got real juice. Tape is green but not clean. SPY up 0.3, QQQ up about 0.5%. IWM actually leading up 0.7, and VIX is still sitting just over 20. So small cap momentum can run, yeah, but this is not some easy mode risk on tape. Top of the board is still wild. MB up about 246%. HCWC up 142%. NAMI and YJ both basically doubled. DSY sneaking in up 67%, and then you've got PN absolutely smoked, down 61%. So here's the job. Not reading green numbers, reading survival. Who's holding bid, who's just a headline squeeze, and who's rolling over after the first burst. First chart up is MB, because this is still the king of the board on pure insanity volume. Price is around $12.97, up 245%, with 19.4 million shares traded against a float under 4.7 million. That's not active, that's a blender. But scorekeeping matters here at the market's desk. Earlier MB failed those higher levels, and now the fight is way lower. I'm watching the $13 handle right now. If MB can actually accept back above 13, okay, buyers at least have a line to defend. But if it keeps getting stuffed under 13, that green percentage is lying to you. That's overhead supply. Under 1250, to me, the tape gets heavy again. Not a prediction, just the live read. Above 13, squeeze attempt. Below 1250, sellers are still pressing. Now, HCWC. And yeah, this is the penny stock battleground right here. We're talking roughly 48 cents, up about 142%, and the volume is just silly. 395 million shares traded, almost 1,000 times relative volume. That's not normal trading. That's a crowd fight. The issue with HCWC is the dilution profile is flagged high, so I'm not treating every green candle like clean demand. On the 1 minute, the read is pretty simple. Are buyers still defending that upper 40-cent bid, or are pushes into the $0.50 area getting stuffed? Watch 50 cents. If it can't get real acceptance above that, this can just turn into Wick City. If it does reclaim and hold there, then at least the tape is telling you momentum is still alive. But this is absolutely not one to get casual with. NAMI next. Totally different price zone, but same idea. Huge participation. This is sitting around $5.97, up 105%, nearly 40 million shares and relative volume north of 700 times. It's an ADR. It already had that earlier weakness, so I'm watching the reclaim attempt really carefully here. $6 is the obvious line on the screen. If it pokes above 6 and immediately wicks back under, that's not acceptance. That's trapped chase volume. What you want to see, just as a tape read, is candles spending time above 6, pullbacks getting bought, and volume not disappearing on the hold. If every bounce is just a wick into that area, then the move is still impressive, but the control is not as clean as the headline percent makes it look. YJ up now, and this one's interesting because it's a cleaner double, but it's nowhere near the same circus as those top chaos names. We're around 252, up about 105%. Volume roughly 437,000. Relative volume is big for YJ, yeah, but it's not that absolute monster liquidity we just saw in HCWC or NAMI. On the 1 minute, I'm treating 250 as the obvious battleground. $0.50 level, right under current price, and that's where the late chasers and the dip buyers start arguing. If it keeps accepting above 250, okay, the doubled move is still holding. If it slips back under 250 and can't reclaim it, then it starts looking like a squeeze that maybe already did its job. DSY next. Big Tree Cloud. And this is the newer board climber I want to separate from the pure exhaustion names. Price is around $5.78, up about 68%. Volume 21.4 million, relative volume 22 times. So no, it's not MB level insanity, but this is real participation. The chart question is simple. Are pullbacks getting bought in a controlled way, or is every pop starting to get sold? For me, 550 is the quick line. Above 550, the follow-through still looks cleaner. Lose 550, and now you're talking about possible exhaustion after a huge move. And I'm flipping over here because the board has recent filings flagged and dilution risk marked high. That matters on these ramps. Shares outstanding near 87 million, float around 25 million. Doesn't mean it can't keep moving intraday, but it means the move has to keep proving itself with volume. If volume dries up, this can go from clean follow-through to trap really fast. Now, quick check on the downside. PN. This is SkyCorp Solar. Tiny float, just over 1 million shares. And it's down 61%, while small caps are actually green. So that tells you this is not just market weakness. This is its own sell program. Volume's about 1.4 million, roughly 11 times normal. For me, $3 is the flush line. If that cracks and stays heavy, sellers are still in control. The first real stabilization attempt is more like a reclaim of 350-ish, where it stops making lower highs and actually traps some late shorts. Now VATE, this is the cleaner squeeze test. 1185, up about 60%, 7.9 million shares, 126 times relative volume, and only about a 4 million share float. So yeah, there's fuel here. 12 is the upside pressure check. Above 12 and holding, shorts stay uncomfortable. Back under 1150, and it starts looking more like that open pop fade. Quick rotation to finish it. RCEL around $7, up 48%. Decent move but thinner, and dilution risk is still high. DOCS is the adult in the room. $32, nearly 30 million shares traded, 4.7 billion market cap. That's the higher liquidity name I'd still keep on the main screen. CVRX is the other side, down 55%, medical device name, high dilution risk. And I don't care about a bounce there until sellers actually prove they're done. Alright, movers board is mapped. We'll keep those levels live and flip into the next look.
Thanks, Markets Desk. Let's put NVIDIA through the earnings lens for a minute. Here at the company desk, this is the question. Not just, is NVIDIA up? It is, what does the business have to keep proving? Stock's around 222, up a little better than the QQQs. And the 1-minute tape is actually pretty clean. Breakout push, volume confirmed it, then a base under the 223.17 day high. So for the tape right now, I'm watching 223.17 above and 221.50 below. Above the high, buyers are still leaning into the story. Lose 221.50, and this nice post-breakout base starts to look a lot less convincing. Okay, now the actual earnings quality, because this is why NVIDIA gets treated differently than almost anything else on the board. Latest reported quarter in the data here. Revenue of $81.6 billion, EPS of 2.40. That's not a normal mega cap growth profile. The year-over-year revenue growth listed here is 85%, and EPS growth is over 200%. Gross margin is running around 74% on a trailing basis. Operating margin about 64%. So yeah, the business is still absurdly profitable. But that also cuts both ways. When a company is $5+ trillion in market cap and trading around 55 times earnings, great is not always enough. The bar is not, are they growing? The bar is, can they keep growing at a scale that justifies this premium? Now, let's hit the fresh company headlines, because these are the breadcrumbs the market keeps using to judge demand. We've got a sale release tied to NVIDIA AI infrastructure. More than 8,000 miles of new long-haul fiber for AI corridors. We've also got ASIO talking about up to 128 NVIDIA HGX B300 systems, with an estimated hardware value around $77 million. Important distinction. Those are ecosystem demand signals, not a new NVIDIA earnings print by themselves. For a company this big, a $77 million hardware reference is not moving the model alone. But it does support the broader story that compute, networking, power, and data center capacity are still the choke points. That's what matters for the earnings multiple. So, the company desk takeaway is pretty simple. NVIDIA's reported numbers still say elite business, elite margins, elite cash generation. The skepticism is the valuation bar. Because when expectations are this high, the stock has to keep seeing proof, not just vibes. Back on the tape, 223.17 is the upside confirmation line from this morning. 221.50 is the base support I care about. No need to overcomplicate it. Coming up, we'll kick it back toward the movers board and see whether the small cap heat is still holding or starting to roll over.
Thanks, company desk. All right, markets desk is grabbing the movers board right now. And yeah, this board is still absolute chaos. SPY's up about 0.5%, QQQ almost 1%, IWM strong too, but breadth is mixed, and VIX is still sitting just over 20. So it's green tape, but not clean tape. That matters. Because when MB is still up over 200% on more than 5,000 times relative volume, that's not just a normal risk-on move. That's auction imbalance. YJ is still more than doubling, HCWC is still a sub-dollar battleground with monster volume, NAMI's still huge, and VATE is hanging around that earlier hit zone. Oof, this is the kind of board where you don't marry a candle. Now MB first, because this is still the scoreboard leader, pulling the 1 minute up. And look at the character change here. Price is around 11.80, still up 214%. Volume over 20 million shares versus an average volume under 4,000. That is nuts. But here's the catch. Earlier, the markets desk had that downside shelf flagged, and buyers lost it. So no victory lap just because the percent gain is giant. Under the old shelf, I'm watching whether it can actually reclaim 12 and hold it, not just wick through. If it can't, and 1150 starts cracking, then this looks more like trapped long tape than clean continuation. Float is only about 4.7 million, so every candle can snap both ways. Tiny restaurant IPO style momentum, huge volume, low dilution risk showing in the data. But right now, the chart is the boss. YJ next, pulling that 1 minute up now. This is Yunji, social e-commerce out of China, and the move is still wild, about 318 on the print, up roughly 158% on just over 2.1 million shares. The key for me here is pretty simple. After a spike like this, does it keep building higher lows, or is it just fading into that prior high zone and handing the move back? Around the $3 area, that's the clean line in the sand psychologically. If buyers keep defending above that 3 handle, okay, the trend is still trying to hold. But if it starts losing 3 and the bounces get smaller, that's usually where these social commerce microcap pops can turn into air pockets fast. Medium dilution risk on the board too. So I'm not treating this like a clean large cap breakout. I'm treating it like a momentum chart that has to keep proving itself candle by candle. Now, HCWC, and this one is the volume monster on the board. Sub-dollar name, trading around 49 cents, up about 143%, and the volume is just absurd. Roughly 425 million shares, over 1,000 times its average volume. So the $0.50 level matters here, not because 50 cents is magic, but because everybody can see it, and on these penny names, the obvious levels become the battleground. If it reclaims and actually holds above 0.50, that's different than just wicking through it and snapping back. And the risk side is loud here. High dilution risk on the board, penny stock structure, trap risk, huge churn. So yeah, fun chart to watch, but this is exactly the kind of thing where a green candle can turn into a flush candle in seconds. I'd be watching whether buyers can defend the high 40s, or if a failed $0.50 reclaim starts pulling it back toward the prior base. NAMI now, pulling the 1 minute up. This is Jingxin Technology, China digital content name, and this one's not quiet either, around 638, up about 120%. 40 million shares traded, roughly 740 times normal volume. So the whole question here is that $6 area. Earlier, when these microcap China names reclaim a whole dollar level, you want to see acceptance. Candles holding above it, dips getting bought, volume not just one and done. If 6 turns into support, okay, that tells you buyers are still defending the move. But if it keeps wicking over 650 and snapping back under 6, that's not strength. That's supply showing up. And remember, dilution risk on the board is marked high here, so I'm reading the tape, not falling in love with the story.
Thanks, Markets Desk. Quick paper book check here at the Stock Whisperer. This is the show's simulated paper portfolio. And yeah, I just cut docs. 300 shares closed. The original entry was earnings momentum, AI-driven beat, raised guide, big gap, clean story, but the tape didn't follow through. It never really reclaimed momentum. It started bleeding back toward that 30.85 invalidation area, and instead of letting the stop get hit into acceleration, I took it off early. That's not a victory lap. It's just risk discipline. Thesis weakened, level got too close, position gone. Now, the book is cleaner. Open positions are just AAPL and MSFT. AAPL is still long 40 shares from 312.14, marking around 314.17, up about $81 on the paper book. The bracket stays intact. Stop at 304.80, take profit up at 326.50. MSFT is basically flat to green, long 20 from 503.90, now 504.28, up about $7 and change. That one still has the tight protection at 499 and the upside bracket at 522.50. Cash is sitting around 63.5K, no new order from me right now. Clean up the loser, keep the brackets on the open names, and let the next setup earn its way in. Coming up, we'll swing it back into the mover scan. Thanks, Stock Whisperer. Quick pit stop on the toolkit we're using live. This is the Pro Terminal Movers board. Same board the market's desk keeps hitting all morning. You've got the tape green, SPY up about 0.5%, QQQ stronger, and then boom, the board shows you where the real heat is. MB, YJ, NAMI, HCWC, relative volume, price, percent move, all in one spot. Not buy buttons, research starting points. Now this page right here, Dilution Center. This is where a lot of traders save themselves from bad surprises, especially on small cap runners. Shelf registrations, ATMs, offerings, that whole supply overhang mess. It's not the fun part of trading, but it matters. A chart can look clean for 5 minutes, and then a filing tells you, yeah, there may be paper waiting above. Data can be incomplete or delayed sometimes, fair, but this keeps the risk question right in your face. And then, for a single name, we can drill in. I'll use MB just because it's been the loudest thing on the board today. Profile page, Filings tab. This is where you want to check what the company actually put in front of the SEC. Then, insider trades, if there's activity. Then news, if there's a fresh catalyst. That's the workflow. Don't just stare at a green candle and make up a story. Pull the filing, pull the news, check whether insiders are doing anything. Then, go back to the tape. And we end where the market's desk lives. The 1-minute chart. Oof, look at that kind of candle action. This is why I like having the board, the filings, dilution, insider data, news, and the chart all in the same place. Fast context, less tab chaos. Again, educational stream, not a command to chase anything. Coming up, we're going right back into the mover scan. If you want the platform we're using on screen, it's Pro Terminal. Sign up at proterminal.io.
All right, let's hit the movers board. Indexes are green, but the real action is still down here in the wild stuff. SPY up about 0.5%. QQQ stronger. IWM up 0.8, so small caps have a little tailwind. But VIX is still sitting above 20, and breadth is mixed, so don't confuse green tape with easy tape. Look at this board. MB still number 1, up 235%. YJ up 223. NAMI doubled. HCWC doubled. That's not normal participation. That's momentum money hunting the thinnest lanes on the board. Here at the markets desk, we're not marrying any of these. We're checking volume, levels, and whether the bid is real or just a trap wick. First up, MB, pulling the 1 minute. Oof, this is still the scoreboard name, 1258 right now, up about 235%, and the volume number is just ridiculous. 21 million shares traded against an average around 4,000. That's a 5,000 times relative volume print. Tiny float too, about 4.7 million, so every aggressive buyer and every late seller moves this thing. We already got that 13 tag earlier. Good hit, score it, but now the question is whether it can actually accept back above 13 or whether 1250 starts acting like the trapdoor. If MB loses 1250 cleanly, I'd expect the tone to change fast because late longs start looking around like, wait, where did the bid go? Above 13 with real candles, different read. Under 1250, caution lights back on. Now, YJ, pulling this one up. And yeah, this is another monster percentage move. It's sitting around 398, up about 224%. But this is exactly where you don't want to just stare at the green number. The test is the high threes. If this thing can keep building over, call it 380, 390, then it's still got that momentum look. But if it starts slipping out of that zone, then that $3 area we talked about earlier comes right back into play as the obvious gravity spot. Volume's big for this name, about 2.7 million against a tiny average, so the tape is active, but I'm treating it like a fast small cap runner. Next one is NAMI, and this is a different kind of heat. 604 right now, up about 107%, but look at the liquidity number. 40 million shares traded already, 700 plus times normal volume. So the $6 area is the whole read for me here. Above 6, buyers are at least accepting the double for now. Lose 6 cleanly, and I'd expect a lot of late chasers to start watching the exit at the same time. Also, context matters. Dilution risk is flagged high on this board. Shares outstanding are way bigger than the float number, so I'm not hyping this as some cute breakout. It's tradable tape, sure, but it's also exactly the kind of name where offerings, resets, and nasty fades can show up fast. HCWC next, and this is where I want everybody to slow down a little bit because this is penny-style momentum. We're at about 40 cents, up roughly 100%. And the volume is just absurd, 453 million shares already. That is not normal activity. So the 40-cent area is the whole read for me on this one. If it's living above 40 and soaking volume, okay, that's where the momentum crowd keeps watching it. If it starts losing 40 and every reclaim gets stuffed, that's where these can turn into straight-up rug pull candles. And remember, dilution risk is flagged high here. This is exactly the type of sub-dollar name where pump and dump risk is real. So I'm not cheering this thing, I'm just reading the tape. Now back to VATE, because this one actually matters for the scoreboard callout. Earlier we had that $12 area circled, and yeah, it got hit. So now the question changes. Is 12 becoming support, or was that just the breakout tag and fade? Price is around $12.50 right now, still up about 69%, with 8.6 million shares traded on a float a little over 4 million. That's a crowded tape. I want to see whether dips toward 12 are getting bought quickly, or whether the candles start closing back underneath it. Above 12, the breakout is still trying to build. Back under 12, that's the rejection zone, and the momentum crowd usually gets a lot less patient. Alright, quick flip to the red side. PN is the ugly one on the board. Pulling the 1 minute now. SkyCorp Solar, sitting right around 330, down about 60%, and this is not a normal little red day. This is a straight flush. Volume's about 1.5 million, roughly 12 times average, and the float is tiny, just over 1 million shares. So yeah, the bounces can look nasty both directions. For me, 330 is the spot on the screen. If it's stabilizing, you want to see it stop making lower highs and actually hold above that area for more than one little candle. If it starts accepting below 330, that's not a base yet. That's just a pause before it leaks again. Also, high dilution risk on the data. So with this kind of solar small cap, you really don't want to confuse a dead cat bounce with a real reversal. Last rotation here. Healthcare movers. And the quality is totally different name to name. First, CVRX. Pulling that up. This one's on the red side too. 267, down 55%. About 4.1 million shares traded, roughly 13 times average volume. It's liquid enough to move, but it's still a thinner medical device name with high dilution risk showing. So, the tape can get jumpy fast. Now, compare that with Dox, totally different animal. Doximity's around 3165, up 53%, and that's over 31 million shares of volume on a $4 billion plus company. That's the cleaner healthcare tape today. Bigger float, bigger liquidity, usually less one-print chaos. And then RCEL, also strong, up about 60% near 762, but volume's only about 2.2 million, relative volume around 9, and high dilution risk is on the board there too. So healthcare's hot, but Dox is the higher liquidity contrast. RCEL and CVRX are more of the thinner risk reads. Alright, movers board did its job. Huge upside chaos up top. PN and CVRX getting smoked on the red side, and Dox standing out as the cleaner healthcare mover. Let's step off the wild board and check the broader tape next.
Thanks, Markets Desk. Breaking headline here. Microsoft is facing multiple securities class action lawsuits, and ProTerminal's newsroom is tracking investor claim deadlines now coming into view. Here's what we know. The lawsuits are tied to securities claims against Microsoft, and they're landing right as the company is coming off a strong Q4. Azure acceleration, better AI monetization, the whole mega-cap quality checklist. What we don't know yet is the big stuff. Legal outcome, whether anything actually sticks, potential damages, timing, or whether this becomes a real earnings distraction issue versus just headline risk. Market read clean and simple. When QQQ is still around 719 and green on the day, this is not an index panic story. It's a stock-specific overhang on one of the biggest weights in the tape. Strong fundamentals can carry a lot, but legal uncertainty is like a parking brake. Maybe it doesn't stop the car, but you do smell it if the thing starts heating up. Next big one. Apple is heading into a pivotal September. iPhone 18 launch, first foldable phone, a Siri update, and a CEO transition all on the board. That is a lot of narrative weight for one product cycle. Why it matters? Apple has been treated like a defensive mega-cap compounder forever. But this headline is really about whether the next hardware cycle and AI roadmap are enough to justify expectations. The story also notes the stock trading above fair value with limited margin of safety and modest growth forecasts. So, here at the macro desk, I'd frame it this way. With SPY near 772 and big tech still bid, Apple doesn't need perfection every day. But into September, it does need the market to believe the innovation engine still has oil in it. And sticking with Apple, the App Store headline is a little more subtle. Revenue rose 0.6% year over year to $3.4 billion in the first 35 days of fiscal Q4. Even though iPhone and iPad downloads fell 4%. That matters because services are the margin machine. If downloads are slipping, but revenue still inches higher, Apple may be getting more dollars per user, not necessarily more users. That's helpful, but it also means engagement is worth watching. So the Apple story today is basically services resilience on one side, product cycle pressure on the other. Coming up, we'll kick it back toward the mover scan and see where the tape is actually paying for momentum.
Thanks, Macro Desk. Let's pull up ONFO because this is penny stock danger tape right here. ONFO is trading around 4.4 cents, down about 27%, while SPY and QQQ are green. So oof, that's straight up relative weakness. And I've got to say this clean. This is a sub-dime stock. We're looking at a 4-cent stock, and anything under 10 cents can get delisted at any moment. It's not something I'd recommend for day trading. Now, chart-wise, volume is huge versus its normal tape, about 18 million shares against average volume around 558,000. Tiny market cap, roughly 300 grand, float listed around 4 million shares. That's why every candle can look dramatic. This opened near 4.64 cents, tagged basically 4.65, then sellers walked it down into the low fours. Okay, look at the structure. This is not clean upside momentum. This is a flush, then a bounce, then chop. The sell pressure confirmed when it broke from about 4.6 cents down to 4.11 cents. And that low volume bounce after the flush is exactly where trapped long games can start. Right now it's basing around 4.42 cents, but it's still below the open and below the cleaner resistance area near 4.59 cents. So here at the markets desk, my board is simple. ONFO above 4.59 cents. I want to see real 1-minute acceptance, not just one wick and reject. Below 4.3 cents, that mid-range base starts to fail again. And if it loses 4.11 cents, that's the day low break, and then this thing is just leaking. No hero stuff here. Now, the headline explains why this is on people's screens, but it's not a clean bullish catalyst. Fresh press release yesterday. Onfolio announced a 1-for-50 reverse stock split to regain NASDAQ compliance, with the company saying that would reduce the float to roughly 850,000 shares. That's the headline. And yeah, traders see a smaller float and they start hunting volatility. But a reverse split doesn't magically fix the business. It changes the share count and the quote structure.
The earlier releases also talk strategic alternatives, NASDAQ compliance, and a path forward for the portfolio. So the story is really compliance plus survival optics, not some clean earnings breakout.
And this is why I don't hype these. Pull up the dilution view, and it's ugly. ONFO is flagged high risk. Active shelf, active equity line, pending S1, 24 total offerings, and about 83.2 million raised over the last 12 months in the dataset. That is a lot of overhead for a stock sitting at 4 cents. So the trade read, not the advice read, is this. If it can't reclaim that 4.6 cent area with volume, the bounce is just noise. If it keeps holding 4.3 cents, maybe it stabilizes for a bit. But with subdime pricing, reverse split risk, and dilution overhang, this belongs in the high-risk bucket only. Coming up, we'll get back to the mover scan and see if there's cleaner leadership on the board. All right, let's refresh the movers board. Markets Desk wants the live leaderboard, not the old screenshot. Tape's green but not clean. SPY up 0.5%, QQQ up 0.8, IWM up 0.8. VIX still green too, so yeah, there's appetite, but it's jumpy. And look at this board. MB still sitting on top, up over 300% at 15 and change. YJ still massive. HCWC still doing monster penny stock volume. NAMI and VATE right behind. I'm not chasing headlines here. I'm asking one thing. Who's still accepting higher and who's just baiting late longs into the offer? Okay, MB first, because this is still the scoreboard name, pulling the 1 minute. Earlier, the Markets Desk flagged 13 as the prove it line, and that one hit clean. Now the board has it at 1527, up 307% on more than 21 million shares traded. Tiny float, about 4.7 million. So this is exactly the kind of tape that can rip and rug pull in the same 5-minute window. For me now, 13 is old business. The fresh thing is 15. If MB keeps accepting above 15, the squeeze is still alive. If it loses 15 and starts snapping back through prior candles, oof, that's where trapped long pressure can show up fast. Watch 15 as the live momentum line here. YJ next. And this is the second place squeeze check, not a victory lap. We're at about 3.98, up 223%. Volume's 2.67 million versus basically a tiny normal day. So yeah, that 504 times relative volume is the whole story. The level is super obvious, $4. If this thing is still reclaiming and holding above 4 on the 1 minute, the shorts are still uncomfortable. If it keeps wicking into 4 and can't stick, that's where the move starts looking less like continuation and more like late chase exhaustion. For me, 380 is the first little sanity check underneath. Lose that, and I'd expect people to start watching whether the squeeze is cooling off. Now HCWC, totally different animal. This is the penny stock volume storm. 39, 40 cents, up 99%. And the share count traded is just ridiculous. 468 million shares on a name that normally does around 400,000. That's over 1,100 times relative volume. But here's the catch. High dilution risk, sub-dollar, Amex, and it can churn forever without actually giving you clean directional control. So on the 1 minute, I'm not impressed by just green candles anymore. I want to see whether 40 cents becomes real support, not just a magnet. If it keeps reclaiming 40 and holding above, okay, bid's still alive. If it rejects 40 and starts living under 37, that's usually where these penny runners turn into wash and repeat chop. NAMI now, pulling the 1 minute. And I'm not going to rehash the earlier $6 drama. The update right here is acceptance versus cooldown. Board has it at 532, still up 82%. And the volume is huge, 41.8 million shares, 764 times normal. So yeah, it's alive, but it's also an ADR momentum name with high dilution risk on the profile. So this is not the same quality bucket as a clean, liquid, large cap mover. What I'm watching is simple. Can it actually accept around this 530 area, or are we just seeing lower highs after the first squeeze? If 530 keeps getting reclaimed, buyers are still hanging around. If it starts living under 5, that's the cooling signal, and then the bounce attempts get a lot more suspect. VATE next. This one's a cleaner continuation quality test because the float is tiny, about 4.1 million shares, and it's trading real volume, 9.3 million on the day. up about 75%. Price is sitting just under 13, so 13 is the line everybody can see. When a low-float industrial runner pushes into a round number like that, I care way less about the headline percentage and way more about the behavior after the pop. Do dips get bought quickly, or does every push through 13 wick and fail? If it can't hold that upper 12 zone, call it 12.50-ish, then the tape starts looking like a failed breakout instead of continuation. Still fast, still thin, but compared with some of the pure penny chaos earlier, this one at least gives you cleaner levels to judge the move. Now flip the board over, PN first, because this is the ugly side of the tape. And that matters today. SPY's green, QQQ's green, small caps are green, and PN is still down about 58%. That's not just market weakness. That's sellers in control. Price is around 348, volume's about 1.6 million, roughly 13 times normal. And the float is tiny, just over 1 million shares. So yeah, these candles can snap around fast. For me, the bounce test is simple. Can it reclaim and actually hold 350, or does every push into that area get sold right back down? If it can't build above that, it's still a failed bounce chart, not a recovery chart. All right, now CVRX, different sector, healthcare device name, but same red side setup. It's at about 269, down almost 55%. Volume 4.3 million, also around 13 times normal. Bigger float than PN, so less tiny float chaos, but the structure is the same idea. If 275 keeps acting like supply, sellers are still driving this bus. Green index tape makes these red charts stand out even more. Last check on the board. DSY. I want to end here because it's up 50%. So yeah, it's moving, but the quality filter is different from the cleaner liquid names we hit earlier. This is Big Tree Cloud, consumer defensive, trading around 520. Volume over 23 million shares, about 24 times normal. So the tape is real in terms of activity. But it also has recent filings flagged and high dilution risk, so I'm not treating this the same way I'd treat a big liquid name with clean sponsorship. On the chart, $5 is the line I'd keep on the screen. Above it, it's still at least trying to hold the breakout area. Lose 5, and this can turn into one of those churn and fade small cap moves pretty quickly. Alright, that's the live movers scan. We've got the squeeze names, the flush names, and the quality filters marked, so we'll keep those levels live and flip into the next check.
Let's talk AI. The names actually carrying it right now. NVDA and the rest of the group, AVGO, MRVL, AMD. The headline driving it. Microsoft faces multiple securities class action lawsuits amid strong Q4 results. I'm pulling up NVDA first to read the tape. Then we'll rotate through the others. Who's leading, who's lagging, whether the whole group's moving together. This is the theme and the price action, not a call on any of them.
Thanks, company desk. All right, movers board time. Green index tape, but weird under the hood. SPY up about 0.5%, QQQ stronger, IWM green too, and VIX still hanging above 20. So yeah, small cap risk appetite is here, but it's not clean. Top of the board is wild. YJ up almost 388% at $6. MB still up 264% at $13.67. HCWC over 100% with nearly 500 million shares traded. Oof, that's a churn machine. Then VATE, NAMI, and on the red side PN, CVRX, WIHG getting absolutely hit. Markets desk is going chart first here. Board gives us the heat map. The 1 minute tells us if it's real momentum or just trapped long cleanup. Let's hit YJ first, because this is the scoreboard leader and it's not even close. YJ is printing $6, up about 388%. 3 million shares on an average volume that's basically tiny, 5,000-ish shares. That's why relative volume is showing 568 times normal. Huge move, tiny base, massive attention. Also quick scorekeeping. Earlier YJ levels actually hit. 3 cleared, then 380 cleared, but this is a totally different stock up here. At 6, I'm watching acceptance, not chasing the headline. If it can live above 6, that tells you buyers are still willing to pay the new range. If it keeps stuffing back under 6, That's where these monster movers can turn into air pockets fast. Medium dilution risk on the board, market cap around 12 million, so this is tactical only. Price, volume, level. Nothing casual about a 388% mover. Now, MB, this is the one where the volume is just ridiculous. We're talking 22.7 million shares on a name that normally does basically nothing. Relative volume over 5,700 times. That's why this can move like a video game. Price is up around 265%, sitting in the 13s, and the prior push already tagged that 13 area. So for me, the whole read is this 1350 zone right here. If it's staying above 1350 and buyers keep absorbing dips, okay, momentum is still alive. But if 1350 turns into that trap door, one candle through, no bounce, volume flips red. That's where these small float restaurant IPO style moves can rug pull fast. I'm not chasing green candles up here. I'm watching whether 1350 is support or just the top of the churn box. HCWC next, and this is a totally different animal. This is the penny stock volume storm, 41 cents, up about 105%, almost 484 million shares traded. That's not a typo. Relative volume over 1,200 times. But here's the catch. Dilution risk is marked high. And when you're dealing with a 40-cent name with that kind of turnover, you have to assume supply can show up out of nowhere. Earlier, we had that 37-cent downside level open, and so far the fact it's holding above that area matters. If 37 cents breaks cleanly, that's the fade confirmation zone for me. If it keeps building higher lows over 40, then it's at least showing some actual intraday strength versus just a one-and-done spike. But yeah, this is not a pretty long-term story read. This is pure tape, pure volume, and a lot of risk packed into a cheap stock. Vate now. And this one's cleaner, honestly, because it's not a 2-cent lottery ticket. It's an industrial name trading near 14 bucks. Innovate at 13.86, up 87%, just over 10 million shares, and that's still 162 times normal volume. So yeah, the crowd found it. The level on this chart is the round number, 13. If buyers keep accepting above 13, that's your continuation zone, because the tape is saying the breakout is still being respected. But if this thing starts losing the upper twos, that's where I'd stop calling it clean strength and start treating it like a failed breakout risk. Tiny float too, about 4.1 million, so the candles can move fast both ways. Don't chase the headline percent. Watch whether 13 stays support or turns into resistance. Now, NAMI. This is where I want to separate a real reclaim from just noise. Stock's around $4.95, up 70%, and the volume is massive. 42.5 million shares, almost 777 times average. But look, after that opening push around 5.30 and the $5 magnet, it's not the same as YJ or MB where it just screams and holds. This is more of a churn read now. $5 is the line everyone sees. If it can reclaim 5 cleanly and actually hold above it, then you can start talking about buyers defending the move. If it keeps poking above 5 and slipping right back under, that's not strength. That's supply hitting the bid. And with high dilution risk on the profile, I'm extra picky here. Big volume, big move, but the $5 area needs to prove itself. Last one I want on the chart is PN, and this is the red side lesson of the board. Skycorp Solar 3.45-ish, down 58%, and the float is tiny, about 1.07 million shares. So yeah, it can move, but it can also air pocket on basically nothing. The level I care about here is 350. If this can actually reclaim 350 and hold it, maybe the selling pressure is starting to chill out a bit. If it keeps rejecting there, that's not strength. That's just a dead cat bounce inside a nasty downtrend. And remember, dilution risk is marked high here, so I'm not treating every green candle like it means something. Alright, back to the board for the quick cleanup. DSY is still liquid, 23.5 million shares, up 56%. But high dilution risk and recent filings, so that one needs respect. RCEL is a more recognizable medical device name, 3 million shares, up 56%, not the same microfloat insanity. CVRX is the healthcare loser, down 55% with nearly 5 million shares, so that's real participation on the downside. WYHG is thinner, about 1.1 million shares, down 48%, so spreads and liquidity matter there. Big takeaway, the tape is green, SPY and QQQ are firm, but this board is pure stock-specific chaos. Monster runners, brutal flushes, and a lot of elevated small-cap risk. All right, we're going to hand it over into the news intermission next and see what headlines are actually driving this tape.
Thanks, Markets Desk. All right, Macro Desk News Brief, and we're starting with the goods pipeline. U.S. container imports jumped 8% in June, even with inflation pressures still hanging around. That matters because it says durable goods demand hasn't rolled over. But here's the catch. More boxes moving through the system ahead of higher fuel costs and tariff increases can mean shipping rates firm up, and that squeezes margins for retailers and import-heavy companies. Good demand, annoying cost structure, the macro version of ordering dessert and then remembering the bill exists. Next one is the energy risk headline. We're tracking new U.S. strikes on Iran after attacks on 3 ships in the Strait of Hormuz, plus the revocation of an oil sales permit. Market impact is pretty straightforward. Anything that raises uncertainty around a key oil transit route can put a geopolitical premium into crude, even as the live oil proxy is actually a touch softer right now, around 118.53, down about 0.3%. So the headline risk is up. The spot move is not chasing it yet. That disconnect is worth respecting. All right, top of the hour market minute here. It's 11:06 a.m. Eastern, and the tape is green, but it's not exactly doing cartwheels. SPY's at 772.8, up about 0.5%. QQQ is the leader, 721.1, up 0.9. IWM's up 0.75 at 300.5. So small caps are participating too. But here's the wrinkle. VIX is still 20.30, slightly green, and breadth is mixed. So the macro desk translation is pretty simple. Stocks are getting bid, especially growth, but the market is still keeping the umbrella open, even though the sun's out. The cross-asset story lines up with that. Bonds are calm, TLT barely green, IEF up about 0.2. The dollar's softer, down 0.28% around 28.11. And the yen proxy is firm. That takes a little pressure off risk assets. But gold is ripping. GLD up 2.28%, near 398.6. Oil's also higher. USO up 0.75, near 119.8. And crypto equities are catching a bid. Coin up 4.7%, NSTR up 4.5%. So yeah, this is not a clean risk-on throw confetti tape. It's more like easier dollar, calm rates, tech bid. But gold and VIX are quietly sitting in the corner saying, don't get too comfortable. On the radar from here, QQQ's 722.70 intraday lid, VIX holding around 20.30. The dollar around 28.11. And the jobs package on today's calendar. Plus Fed bargain at 2 p.m. Coming up, we're going right back into the market mover scan.
Thanks, Macro Desk. All right, Markets Desk is going straight to the movers board because this thing is still spicy. SPY's green, QQQ's green, IWM's green, but breadth is mixed and VIX is still sitting around 20. So don't let the index tape make these small cap charts feel safer than they are. Top row, YJ up over 400%, MB up 232%, HCWC basically doubled, then VATE, NAMI on the green side. Red side still ugly, PN, CVRX, WIHG. That's the board. Now we stop staring at percent change and start checking the 1-minute tape because that's where the traps show up. Top chart first, YJ. Oof, look at the stats here. $6.36, up 417%, 6.77 million shares traded versus an average day of about 5,300. Relative volume over 1,200 times. That is not normal liquidity. That is squeeze tape, headline tape, chat room tape. Whatever you want to call it, it's not a slow institutional grind. Market cap's only about 12.4 million, shares outstanding about 4.9 million, so the turnover is already bigger than the share count on paper. That cuts both ways. If YJ can chew through 6.50 with fresh volume, that's the momentum crowd still pressing. If it loses 6.10, I don't want to pretend that's healthy. That's where the air pocket risk starts to matter. Not chasing a 400% mover just because it's blinking green. Now, MB, this one is wild because it's not some biotech headline name. It's a restaurant group, Taiwanese hot pot and barbecue, and the board is showing 1240-ish, up over 200%. The crazy part is the volume. 23 million shares versus basically nothing on average, so relative volume is 5,800 times normal. That's not a typo. Float check too, about 4.7 million shares, so yeah, this can whip. On the 1 minute, what I care about right now is the pullback quality. If it's stair-stepping down on lighter candles and still holding that $12 zone, that's controlled. If the red candles start expanding and every bounce gets stuffed immediately, that's the sloppy version. Big difference. I'd keep the 12 area on the screen here, not because it magically has to hold, just because for a runner this stretched, losing a clean round number shelf can change the character fast. HCWC next, and this is the penny stock tape check, so totally different animal. 40-cent stock, up basically a double, and look at that volume number, almost 500 million shares traded. That is absolute blender tape, relative volume over 1,200 times normal, float around 23 million, but the dilution risk tag is high, so I'm not treating this like a clean quality move. On the 1 minute, I'm watching exhaustion versus fresh bid. Exhaustion is when it keeps doing those big green pops, but the next candle can't hold the upper half, volume spikes, and then it bleeds right back. Fresh bid is tighter. Dips get absorbed, candles start basing instead of just whipping, and the sellers stop winning every push. We already know the big psychological area here. I'm more interested now in whether the high 30s keep attracting buyers, or whether this starts turning into churn after that monster volume burst. VATE now. This is the one I wanted to come back to, because it already gave us that momentum hit earlier, and now the question is the volume still feeding it, or is this just the squeeze cooling off? It's at 1307, still up 76%, and the important part is the volume, 10.7 million shares versus about 62,000 average. So yeah, it's still active, but after a move like this, I don't want to chase the headline number. I want to see if 13 stays meaningful on the 1 minute. If it's holding above that area and candles are tightening instead of dumping, fine, squeeze still has some structure. If it starts slipping under 13, with volume picking up the wrong way, that's usually where the late momentum crowd gets tested. NAMI next. Totally different read, because this is sitting right under that $5 magnet. $4.95, up about 70%, 43 million shares traded, and relative volume is still massive, at almost 800 times normal. So there is a tension here, no question. But this is exactly where I'm watching the quality of the bounce. Can it actually reclaim 5 and hold it? Or do we just keep seeing lower high pops into that level and sellers leaning on it? Also, keep the risk lens on. High dilution risk tag on the board. China Digital Content ADS. Big intraday volume. Sub $5 name. That doesn't mean it can't trade clean. It just means the tape has to prove itself. 5 above is the clean psychological reclaim. Under that, every push that fades gets a lot less convincing. All right, red side speed round, and then we'll clean up the board. PN first. This is the damage control chart, not a hero chart. Skycorp Solar, 340, down 59%, only about a million share float showing here, and the volume's still almost 14 times normal. So if this thing is trying to bounce, I care way less about the first green candle and way more about whether 350 can actually turn into support with real volume behind it. Without that, it's just a dead cat wiggle inside a nasty trend. CVRX next. Medical devices, 265, down 55%, 5.3 million shares, 16 times average volume. Same idea, but a little cleaner, because it's a real operating healthcare name, not a tiny solar microfloat. For me, the $2.75 to $3 zone is the reclaim area. If it can't get back into that pocket, the bounce is still weak. If it does reclaim it on volume, then at least you've got shorts respecting the level. But yeah, massive red candle day, so don't confuse a bounce with a full repair. Now board cleanup, RCEL is the healthcare rebound that actually has some strength. 736, up 55%, nearly 13 times volume. That's the cleaner looking gainer in this last batch. DSY, 529, up 53%, 23 million shares. but recent filings and high dilution risk on the board, so I'm not putting that in the same bucket quality-wise. And WYHG, food name, 491, down 50%. That's your reminder that the food and consumer defensive movers are split today. MB ripped, HCWC went nuts, but WYHG got smoked. So final read, green indices, wild small cap tape, but quality is all over the place. We'll leave the movers board there. Coming up next, let's rotate into the next live market check.
Thanks, Markets Desk. Quick stock whisperer check on the simulated paper book. We just opened CVX, 45 shares long at 186.955. The setup is simple. Oil's catching a bid on the Iran conflict headline. CVX is the clean liquid equity expression, and the broader tape is still supportive. SPY QQQ IWM all green, so I want defined risk exposure, not a loose swing at it. Right now the position is flat, basically 0 P&L, because it was just opened. The first confirmation level I'm watching is 190. If buyers can press it through there, that tells me energy's got real follow-through. Here's the risk box. CVX has a take-profit order resting at 195.50, and the stop is down at 182.80. Before it even gets there, I'm watching 184.50 as the momentum warning line. If it loses that, the trade may be telling me the oil catalyst isn't sticking. This is the broadcast simulated paper portfolio, so don't copy it blindly. This is just the thesis, the level, and the defined risk. Rest of the book, AAPL is still working, 40 shares long, up about $70, stop tightened near 311.80. MSFT is small red, down about $14, and the 499 stop is still the line. Calm book, clean brackets, no hero trades.
Thanks, Stock Whisperer. Let's snap over to EXFY, because this little software name is actually moving. Oof, look at that ramp. EXFY around 270 right now, up about 26%. And that matters because the tape's green. Yeah, but this is way ahead of SPY and QQQ. Day low near 236. Day high, 274. The clean part is the base, 256 to 258. Then the breakthrough 259, and volume actually shows up on the push. 38K on one of those ignition candles, then another pop over 23K as it presses into the highs. I don't have a clean VWAP print in this packet, so here at the markets desk, I'm using candle shelves. 258 is the support shelf, 274 is the lid. Watch 274 above. Quick risk check though. This is still a small cap momentum tape, about a 210 million market cap, float around 66 million. Volume already 1.63 million versus roughly 732K average. So it's active, but it can still snap back fast. Dilution screen is not screaming emergency. No active shelf, no equity line, no pending S1. Overall risk marked medium. Still, overhead supply and history are elevated, so don't treat this like a clean mega cap breakout. Back on the chart, if 2.74 rejects and this loses 2.58, character changes fast. Watch 2.58 below. That's where the breakout starts looking tired, not just paused. Coming up, we'll hit the full movers board again. All right, let's reload the movers board and see what's still got real juice. Markets desk here. Indexes are green, breadth is still mixed, so I care about relative strength and I care about liquidity. Boards refreshed. YJ still the monster. $7 and change, up about 474%. MB still huge, just under 11, up 190. HCWC is holding that 39-cent area. VATE is still above 13. NAMI sitting right around 5. Red side, PN and CVRX are still ugly. WYHG still heavy. We're not camping on the board. We're going chart by chart. Keep score 2. YJ above 6, already hit earlier. MB below 1350 hit. And that MB12 shelf is still on the board. YJ first. Pull up the 1 minute. This is absurd tape. Around 706, up 474%. 11.6 million shares traded versus a normal day around 5,000 shares. That's over 2,000 times relative volume. Tiny market cap too, about 12 million. So yeah, this is not normal institutional flow. This is a full intraday auction. Earlier, the $6 reclaim paid. Now the line moves up. I'm watching 7. If YJ starts accepting below 7, After this kind of extension, chassis bids can vanish fast. If it keeps holding above 7 and the pullbacks stay shallow, then the squeeze is still alive. But oof, this is the kind of chart where one bad wick changes the whole personality. MB next. And this is the restaurant name Master Beef, but the tape is trading like a low-float momentum stock, not like a normal restaurant chart. We're around 1091, up about 190%, 24 million shares already, and the relative volume number is just stupid, over 6,000 times normal. So the question on this one is pretty simple. That open area near 12, did that become the ceiling? Because if every push into that $11.75, $12 shelf gets sold, then you've got a clean supply zone. But if buyers keep defending 10.50 to 11, then it's not dead, it's just basing under the shelf. I'd be watching that band really closely, 12 above as the reclaim level, 10.50 to 11 below as the sanity check. If that lower zone starts cracking with volume, then the momentum crowd can disappear fast. Now HCWC, this is the kind of one you have to keep your head on straight with. 39 cents up about 95%, but listen to the volume. 512 million shares. That is an absolute washing machine, and the dilution tag on the board is high. So yeah, the candles can look exciting, but this is not one to romanticize. On the 1 minute, 40 cents is the whole conversation for me. If it reclaims 40 and actually holds it, okay, that tells you buyers are still willing to pay up. If it tags 40, stalls and rolls back under, that's rejection. And with this much volume, rejection can turn into a trap really quickly. So I'm reading 40 as the line between repair and supply, not as some magic breakout. Penny runners can squeeze, sure, but they can also fade out of nowhere. Wait now. Pull up the 1 minute because this is the next clean momentum test. 1336, up about 80%, and the float is right around 4.1 million. So yeah, this can move fast when volume stacks. And remember, earlier we had that $13 level flagged. That one got hit. So now the question is totally different. Is 13 turning from breakout spot into support? If it dips into 13 and buyers actually show up, that's constructive. If it snaps back under 13 and starts living below it, then that prior strength can turn into a trap pretty quickly. I like that it's not just drifting on no volume. 11 million shares is real activity versus its normal tape. But with a float this tight, I'm still treating every candle like it can overshoot both ways. Name me next. And this one is sitting basically right on the big psychological line. 494, up about 70%, 43 million shares traded. So the volume is not the issue here. The issue is quality of the reclaim. Earlier it already gave us that below 5 hit. So now I'm watching whether $5 becomes resistance or whether it can repair back through it and hold. Big difference. A clean reclaim with volume holding under it looks way different than one little wick through 5 and then sellers immediately stuff it. And keep the risk hat on with NAMI. Dilution risk is marked high. It's a momentum name. And when a stock is doing this much volume around a round number, you can get a bull trap candle that looks great for 30 seconds and then completely reverses. So 5 is the line on the tape right now. Not a magic number, just the spot traders are clearly reacting to. Okay, quick damage check before we wrap the board. PN first. This is the other side of momentum. 338, down about 59%, and even with the market green, SPY up 0.5%, QQQ stronger, this thing is just broken tape. Only about a 4 million market cap, tiny float around 1 million shares, solar name, dilution risk flagged high. So on the 1 minute, I'm not trying to romanticize a bounce here. The first thing I'd want to see is a real reclaim attempt with volume behind it. Not one candle, not a little dead cat pop. If PN can't build above that 350 area, it's still sellers in control. Now CVRX, same idea, but cleaner level. 260, down 56%, 5.6 million shares, about 17 times average volume. The open repair line is $3. That's the level. Below 3, it's still damaged. Above 3, with volume actually expanding, then okay, now you can at least say buyers are trying to repair the open. And then final quality rotation. RCEL is the healthcare rebound. 727, up 53%, but still a high dilution risk name, so I'd keep the 7 area on watch. WYHG is the weak food name. 485, down 50%. If it can't reclaim 5, that's still heavy. And DOX is the cleanest liquid mover on this whole back half. $30, up 45%, 36 million shares, 4 billion plus market cap. That's not the same sketchy low float tape, that's real institutional liquidity. So final takeaway, top board is still wild, but DOX is the cleaner quality move. CVRX3 is the repair level, and the tiny float runners need volume confirmation or they can rug fast. All right, movers board is reloaded. Let's hand it forward and keep the tape moving.
Thanks, Markets Desk. Breaking here from ProTerminal. Allegheny Technologies shares are plunging after a surprise shortfall in second quarter earnings. What we know, the company missed on earnings and revenue, and the shortfall is being tied to weaker demand in aerospace and defense. What we don't know yet from this wire, whether management has changed forward guidance, or whether this is being framed as a one-quarter air pocket. Market read from the macro desk. In a tape where SPY is still up about 0.64% and QQQ is up just over 1%, an industrial name getting hit on demand weakness stands out. Cyclical industrials don't miss quietly. They tend to knock over the furniture. Next, big headline. NVIDIA is warning on slowing gaming sales, even while AI and data center demand remains strong. That matters because NVDA has been treated like the cleanest AI lever on the board. But this is a reminder that the company still has different engines under the hood. Gaming is consumer sensitive. Data center is CapEx sensitive. Same stock, different macro weather. With QQQ up around 1.03%, the market can absorb mixed mega-cap news today. But investors are going to care about whether AI strength keeps offsetting the gaming drag. And the rates story. Treasury yields are rising after a more hawkish tone from Fed officials, with the desk seeing the market reprice borrowing cost risk. Why it matters? Higher yields lift the hurdle rate for equities, especially long-duration growth names, and they make every earnings miss a little less forgivable. That's the macro glue between ATI getting punished, NVDA needing AI to carry the story, and gold still up 2.28% while VIX sits around 20.27. Not panic, but definitely not a nap. Coming up, we'll kick it back into the mover scan and see who's actually absorbing this tape.
Thanks, Macro Desk. Quick tool check while the tape's still green. Everything we're flipping through here at the Markets Desk is ProTerminal. First stop, Dilution Center. This is where I want the shelf, ATM offering risk stuff in my face before I get excited about a runner. Especially these small cap names. If the chart is ripping, but the cap table is messy, poof, that changes the read fast. Now hit the movers board. This is the heartbeat of the show. Top gainers, top losers, price, percent move, relative volume, all in one place. Look at the board. YJ, MB, HCWC. These are huge percentage moves. And the broader tape is risk on with SPY, QQQ, IWM green, but Brex still mixed. So the board isn't a buy list. It's a triage screen. What's moving? Is volume real? Is it liquid enough to even respect? And then, don't just stare at the green number. Pull the profile. I'll use MB as the example, because this thing has been all over the board today. Filings first. Recent filings matter because they tell you what the company can do, not just what the candle is doing. Then, you can check insider activity, news, the basic company page. Quick context before you start pretending every spike is clean demand. That's the difference between watching momentum and just chasing candles. Last piece, the 1-minute terminal chart. This is where the Markets Desk lives. Candles, volume bursts, VWAP behavior, wicks, reclaim attempts, that's how we keep score in real time. And yeah, educational stream only. Risk is real, data can move or be incomplete. But having the movers, filings, dilution, insiders, news, and charts in one workflow is the edge on speed. If you want the same setup we're using on air, go to proterminal.io. Coming up, we're right back to the Market Mover Scan.
All right, let's run the board. Here's what's actually moving. Yunji Inc., YJ, is up about plus 582.9% on roughly 3,181.7 times its usual volume. Master Beef Group, MB, is up about plus 156.5% on roughly 6,171.1 times its usual volume. Alpha Technology Group Limited, ATGL, is up about plus 109.5% on roughly 0.6 times its usual volume. Let's take the top names one at a time on the 1 minute. YJ first. Yunji Inc., YJ, is up about plus 582.9% on roughly 3,181.7 times its usual volume. On the 1 minute, watch VWAP, the volume on the push, and whether it's holding the level or fading. MB first. Master Beef Group, MB, is up about plus 156.5% on roughly 6,171.1 times its usual volume. On the 1 minute, watch VWAP, the volume on the push, and whether it's holding the level or fading. ATGL first. Alpha Technology Group Limited, ATGL, is up about plus 109.5% on roughly 0.6 times its usual volume. On the 1 minute, watch VWAP, the volume on the push, and whether it's holding the level or fading. All right, quick chart lab here. Let's pull up Bivy and just read the candles. No fluff. Markets are green, QQQ's up over 1%, and this thing is not trending with the tape. It's stuck. Tight range, choppy tape, and the markets desk is watching whether this is a base or just dead money after the morning volatility. Okay, look at the structure. BIVI's 1 minute chart is basically boxed in between about 98 cents on the downside and that 101 area on the upside. Day high is up near 1.045, day low around 0.9801, but the live action is way tighter than that. You had the early lower high, lower low drift, then it tried to stabilize around $1, $1, 101, but every push has been messy. The one pop that matters came from roughly 1.02 into 1.0391 on heavy volume, about 23,000 shares, and oof, it faded. That's the tell. Buyers showed up, but they didn't hold the bid. Then later, the heavier volume candle was actually down into about 0.9899 on roughly 95,000 shares. That's the bigger participation candle, and it confirmed the sell pressure more than the upside.
Thanks, Markets Desk. Quick check-in here at the Stock Whisperer Paperbook. This is the show's simulated portfolio. Just to be crystal clear, not a copy this account. We're sitting on about 64,119 in cash and 4 open positions. AAPL is the cleanest hold right now. Long 40 shares from 312.14, trading around 312.53. So basically flat green, up about $16. The stock is tight at 311.80, so if Apple can't stay above that, the paper trade is done. MSFT is a little weaker, long 20 from 503.90, now 502.33, down $31. Still above the 499 stop, so the thesis isn't broken, but with QQQ up over 1%, I want more from that name. Now the two newer pieces are where I'm paying the most attention. CVX is long 45 from 186.95, now 186.72, down about $11. The oil thesis is still alive, but it's not paying us yet, so the bracket does the work. Stop at 182.80, profit taker up at 195.50. No need to force the read there. ATI is the one I'm grading hardest. That's a short, 40 shares, average 225.22, now 226.83, so we're red about $65. The earnings shortfall catalyst made sense, but the stock has not confirmed downside yet. Stop is 232.50. Target order is down at 210. For me, the real tell is 220. If sellers can't push ATI below 220, then this is just a headline short sitting inside a green tape, and I have to respect that. So the watch list is pretty simple from here. AAPL above 316.50 would be the first clean continuation signal if buyers finally clear that morning supply. ATI below 220 is the downside confirmation level for the short. And I still have NVDA on watch below 220. Not in the paper book right now, but that's where the gaming sales warning would start showing up as real technical pressure instead of just a headline. No new trade from the stock whisperer here, no bracket changes. It's midday, breadth is mixed, VIX is still sitting around 20, so I'm fine letting the levels make the decision. Coming up, we can kick it back into the movers scan and see where the real volume is rotating.
Thanks, Stock Whisperer. All right, Markets Desk is back on the movers board, and this thing is still spicy. SPY's up 0.6, QQQ's up more than 1%, IWM green too, but breadth is mixed and VIX is not exactly dead. So when you see this board, don't confuse green indexes with easy tape. YJ is still the alien move up top. ATGL is sitting there with a massive percent move but way lighter relative volume. MB still has monster volume. VATE is hanging around that prior breakout zone, and NAMI is still trading like a crowd control problem. We're going chart by chart now. Fast. YJ first, because yeah, this is still the monster. 858-ish, up almost 600%. 22 million shares traded against a 5,000 share average. That's not normal interest. That's a full tape event. Here at the Markets Desk, I'm not trying to marry a chart like this. I'm asking two clean questions. Does 850 keep catching bids, and can it force a real print through 9? If 9 is just a wick and it snaps back, that's chase risk. If 850 gives way, the momentum crowd can get loud on the exit. We already had the earlier YJ level hit on the scoreboard, so now I'm resetting it. Above 9 is the clean upside line. Below 850 starts to get messy. ATGL next, and this is the one where you've got to separate the headline number from the actual tape. Yeah, it's up about 164%, price sitting just under $20. But look at the volume, only 36,000 shares. That is not the same animal as YJ doing 22 million. So on the 1 minute, this can look insane candle to candle, but the spreads and liquidity matter way more here. Float's about 1.5 million, so it can move fast, but I'm not treating this like clean momentum unless it can actually trade with size around that $20 area. If 20 rejects and the prints get jumpy, that's thin stock behavior, not necessarily broad demand. Now back to MB, because this one's a much clearer liquidity story. Master Beef is still up around 140%, but the reason I keep coming back to it is the volume. 25 million shares, relative volume over 6,000 times normal. That's real attention. The question after that earlier breakdown is super simple. Is $9 becoming a floor, or is it just pausing before another leak? Price is around $9.05 right now, so I'm watching the way these 1 minute candles behave right around 9. If it holds, bases, and stops making lower pushes, okay, that's stabilization. If it starts accepting below 9, then the whole character changes from controlled pullback to momentum unwind. VATE now, and this one's hanging right around that low 13 zone, so I'm watching the behavior more than the headline percentage at this point. 1310-ish, up about 77%. 11.5 million shares, and that's roughly 185 times normal volume. So yeah, the volume is real. The question is, do buyers actually accept it up here? Or is this just a late-day fade setup where every push gets sold back into the range? With a 4.1 million share float, it doesn't need a ton to move. But after a move this steep, I don't love chasing candles that are already stretched. I want to see if the tape can build sideways in the low 13s instead of just popping, rejecting, and leaking. NAMI next. This is another monster volume name, but it's a different feel. 507, up about 74%, and look at the tape. 44.6 million shares traded, 800 plus relative volume. That's not a sleepy move. But when something has already expanded this much, the danger is extension. If $5 starts acting like a ceiling instead of a base, that can get messy fast. I'm not refighting the earlier reclaim idea here. Right now it's simpler. Can it hold the current $5 area and keep buyers interested? Or does it turn into one of those grind down fades where the volume stays high, but the candles stop making progress? Also worth noting, dilution risk is marked high on the board. So on this kind of runner, I'm staying very tape first. HCWC now, and this is where I really want to cool the room down a little bit. Because yeah, it's up about 59%, but the story is the tape, not the hype. 32 cents-ish, 537 million shares traded. That is absurd volume for a name this size. Relative volume over 1,300 times average. So everybody found it today. Scanners, momentum rooms, algos, all of it. But it's still a penny stock. And the dilution risk on the board is marked high, so you cannot treat this like a clean large cap breakout. On the 1 minute, I'm watching 32 cents as the immediate battleground. If it can't stay accepted above that, the next real gut check is 30 cents. Under 30, these can get slippery fast. Fun chart to read, not a name to chase blindly. Quick scoreboard on the other side of this board. PN is the ugly one, down almost 60% at about 332, and that's with high dilution risk too. So that rebound has to prove itself before I care. CVRX, same deal on the red side. 254, down 57%, 6 million shares. Medical device name getting absolutely reset. WIHG is down 54% at 455. Lighter volume than the crazier names, but still a real flush. And then RCEL is the cleaner green side rebound name here. 729, up 53%. Volume almost 15 times normal, but also high dilution risk on the board, so even the green names need respect. Big picture, indexes are still firm. QQQ up a little over 1%, IWM up just under 1%. So the tape is risk-on enough for these movers to keep firing, but the quality is mixed. All right, let's leave the wild board there. Coming up, we're flipping from these small cap rockets into a mega cap watch and seeing where the real leadership is. All right, let's pull up TWLO, because this software tape is loud today. Here at the markets desk, this is the kind of chart you stop on. QQQ is up just over 1%. SPY's green too. Breadth is mixed, fine. But TWLO is up about 30%. That's not index drift, that's single name demand. Daily chart first. Opened around 235, low down near 227, and then buyers just kept stepping in toward 253. Big earnings gap, big candle, real range. Oof, look at that push into the highs. The daily structure is clean. This thing spent time building between roughly 180 and 200. Then the breakout over 230 got volume behind it. That's the part that matters. Not just price floating higher. Volume actually confirmed the move. Now the problem, if you're chasing headlines, is location. It's sitting around 251 after tagging the 252.70 area. So 253 is the lid on my screen. Above 253, that tells you buyers are still paying up after the gap. Under 230, different conversation entirely, because that was the breakout zone. For right now, the daily read is simple. Strong trend, extended candle, resistance right overhead. Now let's drop down to the 1 minute, because this is where you see if the gap has real intraday sponsorship, or if it's just opening auction excitement. And yeah, this is not a total rug pull. Early range was around 240.70. Then it grinds through 247, 248, 250, and volume pops on that push into 250.50. That's good tape. After that, it cools off, but it doesn't collapse. It's basing around 251 to 252 with lighter volume. So for the tape watchers, 252.58 to 253 is the immediate breakout shelf. That's the scoreboard level. And 250 is the first real intraday line where I'd want to see buyers defend the base. Lose 250 with real volume, and the chart can easily shake people out, because the range today is already about $12. Clean mover, but not sleepy.
Catalyst check. The fresh release is last night's Q2 results.
Twilio is framing it as organic growth acceleration, record profitability, and record free cash flow. So the market is rewarding the profitability reset and the growth reacceleration story. That's why the chart matters here. Earnings gave it the spark. Volume confirmed the first leg. Now the tape has to prove it can hold the upper base instead of giving back the gap. Watch 253 above. Watch 250 below. Coming up, we'll swing back out and see how this fits inside the broader market overview.
All right, quick pro terminal pit stop. This is the exact checklist we're using before we chase any monster percentage move. First stop, dilution center. This is where the markets desk wants the ugly stuff up front. Shelves, ATMs, offerings, anything that can hit supply. Oof, if a small cap chart is ripping, but the dilution page is flashing risk, that changes how you read the move. It's context, not a trade signal. Now, Flip to market movers. This is the heartbeat of the show. Gainers, losers, relative volume, price, direction, all in one board. And look, the point isn't green means buy. No. The point is, what's moving, how hard is it moving versus normal volume, and is the tape confirming it or just throwing a fake wick at you? Risk on tape today, but breadth is mixed, so you still have to check the names one by one. Here's the next layer. Pull up an actual name and check the paper trail. I'll use VATE, just as the example on screen. Filings first. Recent registrations, offering language, 8Ks, anything that explains why supply or catalyst risk might be sitting behind the chart. Then insiders. Are people filing activity? Is there anything worth noting? Or is the tape just running on volume? Sometimes data is incomplete or delayed, so you don't treat one tab like gospel, you stack the evidence. And then we finish where the market's desk lives. The 1-minute terminal chart. Candles, volume bursts, wicks, VWAP behavior, failed breakouts, reclaim attempts, that's the live tape. Everything you're seeing on this stream, the movers board, dilution checks, filings, insider tabs, news, and the chart. That's ProTerminal. Educational research workflow, not financial advice, not a magic button. If you want the same setup on your screen, go to proterminal.io. Coming up, we'll kick it back to the market overview and see if this risk on tape is actually broadening out.
Thanks, Markets Desk. All right, quick macro check. The tape is green, but it's not the clean victory lap kind of green. SPY's at 773.24, up 0.61%. QQQ 722.46, up 1.09%. IWM, the small cap read, is 301.02, up 0.93%. So yeah, risk is bid. But here's the little eyebrow raise. VIX is still 20.30, actually up a hair, and breadth is mixed. That's not the whole market holding hands and singing. That's big cap growth doing the heavy lifting while hedges haven't fully left the building. On the Qs, the intraday range is pretty clean. 718.82 low, 723.50 high. Current area around 722.45. So here at the macro desk, 723.50 is the lid on the risk-on mood ring, and 719 is the floor. If QQQ can stay pinned near the highs while VIX sits over 20, buyers are accepting a noisy tape. If not, it's just midday confidence wearing a fake mustache. Now, the reason tech can be the hero today is the cross-asset setup. Bonds are firm but not screaming. TLT's 82.58, up 0.07%. IEF's 93.12, up 0.18%. That little duration bid takes some pressure off long growth names. The dollar proxy is softer too. UUP around 28.08, down 0.41%. And the yen proxy, FXY, is firmer at 58.15, up 0.44%. So FX is not yelling dollar squeeze right now, and that helps the risk trade breathe. But here's the wrinkle. Gold is ripping. GLD 399.59, up 2.54%, and oil is still green too. USO 119.51, up 0.54%. So the market is buying growth, buying hedges, and buying some inflation protection all at once. The macro buffet plate, where every food touches. Crypto beta likes that liquidity feel. BITO up 0.98%, Coin up 4.99%, MSTR up 5.57%. Just remember, those crypto-link names are the speedboat, not the weather report. Okay, last thing on macro before we kick it back to the tape. The next real test is that 12/30 jobs data hit. Payrolls, unemployment rate, and wages all dropping together. And the market's not just going to trade the headline number, right? If wages are hot, rates can twitch. If unemployment moves, small caps can react. Then at 2 o'clock you've got Barkin speaking. And I'm not sitting here trying to predict the Fed. That's a trap. But on a day where tech is green, bonds are firm, and VIX is still parked around 20, any rates language can move the edges of this tape. So for the watch list, QQQ is still the clean chart. Day high is 723.50. That's the upside line. $7.19 is the spot I don't want to see give up if this is going to stay constructive. VIX 20 is the vibe check. Under that, risk feels calmer. Above it, the green tape can get choppy fast. Dollar softer, yen's bid, so that's helping the rate-sensitive side a bit. And then gold up about 2.5%, oil green too. GLD and USO still acting like inflation hedge demand hasn't gone away. All right, that's the macro map. Let's hand it back to the tape and see what's actually breaking levels right now.
Thanks, Macro Desk. Let's pull up LESEL real quick, because oof, this chart is not subtle. Market's green, QQQ up over 1%, IWM firm, and LESEL is doing its own damage. Opened around $1.64, tagged roughly $1.65, then the bid just vanished. You've got lower highs, lower lows, and that hard air pocket from the 140s down toward $1. That's not a slow leak. Look at the volume on the break. That's the tell. The big red candles weren't happening on sleepy tape. You had spikes around that dump, with the low coming near $1. So here at the markets desk, the score is simple. $1 is the line the bulls have to defend, because below that, this turned slippery again fast. The rebound was real enough to respect. It bounced off the low and pushed back toward the $1.30, $1.31 zone, but it did not reclaim the morning structure. It's a partial recovery, not a clean reversal. All right, let's hit the movers board. Markets desk reset, quick and dirty. Tape's green, QQQ up just over 1%. IWM green too, but VIX is still sitting above 20, so don't treat this board like everything is clean risk on. Look at the leaderboard. YJ is the monster, up about 790% at 10.95. ATGL next, up 249% at 26.18. MB still hanging in there, up 133% at 8.75. Then you've got VATE, NAMI, HCWC, all still lit. Oof, this is not a Sleepy Friday board. This is momentum plus trap risk, so we're going chart by chart, not just staring at green numbers. Okay, first chart, YJ. This is the one everybody's staring at. Price is $10.95. Volume's already 25.7 million shares, and the average volume on the board is only about 5,300. That's just wild expansion. The company's a China social e-commerce name, market cap around 33 million, shares outstanding about 4.9 million. So when this gets attention, it can move like a video game. But here's the thing, when a stock is up almost 800%, the chart has to prove it can keep structure. For me, the clean battleground right here is 11. If YJ can actually accept above 11, that's where the squeeze crowd stays interested. If it keeps rejecting under 11, those wicks can get nasty fast. We already had 850 flagged earlier as the lower mess line. Still on the board. But right now, live tape, it's all about whether 11 becomes support or stays overhead. ATGL next. And this is a totally different kind of move. Pull it up on the 1 minute, and you can see why I'm calling this a squeeze check, not a big institutional tape. Stocks around 2618, up about 249%, but volume is only about 99,000 shares. Relative volume's 3 times normal, so yeah, it's active for ATGL, but compared with YJ or MB, this is thin. Float's about 1.47 million, so with that kind of supply, the mid-20s can move violently both ways. The line I care about here is that 25 area. If it's holding above 25 and the bids keep stepping up, okay, the squeeze is still alive. If 25 starts cracking, these low float moves can go from clean momentum to air pocket really fast. Now MB, this one's the cleaner participation read. We're around 8.75 up 133%, and the tape is massive. 26 million shares traded versus an average volume under 4,000. That's not a typo. Relative volume over 6,500. So this isn't just a tiny share count squeeze with nobody home. There's real churn happening here. Float's about 4.69 million, so it's already turned over multiple times on the day. What I'm watching now is the quality of the bid around 850 to 875. If 875 keeps getting sold into, that tells you supply is leaning on it. If dips toward 850 keep snapping back, that tells you traders are still defending the move. Big difference between heavy volume that confirms and heavy volume that distributes. MB is right in that decision zone now. Wait now, pull this one up, because this is the industrials runner on the board. We're sitting around 1330, up basically 80%, and it's not sleepy volume either, about 11.9 million shares versus a normal day closer to 62,000. So the tape is absolutely lit. The level I care about here is that 13 area. Above 13, the bid still looks like it's trying to hold the breakout zone. Back under 13, then you start asking if this is just a midday squeeze losing pressure. Float's about 4.1 million, so yeah, it can move fast both ways. I'm not chasing that kind of candle blind. I just want to see if buyers keep defending 13, or if every pop starts getting sold into. Naming next, and this is probably the biggest raw tape after HCWC. 45 million shares traded, up about 76%, price sitting just over $5. That $5 line is the clean psychology level here. Above 5, traders are still treating it like a real momentum name. If it starts living under 5, that's where the character can change quick. An important reminder on this one, dilution risk is marked high, so when you get a huge volume small cap move like this, I'm always checking whether the move is supported or whether it's just a liquidity event into strength. Doesn't mean it has to fade, but it means you respect the risk. Watch the candles around 5. If buyers keep stepping in there, fine. The tape is still alive. If 5 turns into resistance, totally different conversation. HCWC now. Quick penny stock risk check, because this is the loudest tape on the board by raw volume. We're talking 32 cents, up about 60%, with 548 million shares traded. That's insane turnover for a roughly $10 million market cap name. So the whole read is still that 0.32 area. If it holds there, fine. The crowd is still defending the line. But if it loses 32 cents and can't reclaim it, this can turn from momentum into supply really fast. This is Pennyland, guys. Fun to watch, dangerous to overstay. All right, flip back to the board and look at the rotation underneath the fireworks. PN is still buried, down about 58%. 3.49, solar name, tiny float, high risk profile. CVRX is basically the same percentage flush, down 57 plus at 2.51, and that's medical devices getting hit hard on real volume. WYHG is another ugly one, down about 52%, so the red side is not quiet. But then RCEL is sitting there bid, up 55% at 7.39. Healthcare again, but totally different tape. So that's the board right now. Green market, wild small cap squeezes, and some absolute trapdoors on the other side. Coming up, let's shift from the stock movers into options vol, because on a tape this jumpy, volatility is the story.
Thanks, Markets Desk. All right, quick vol check, because this tape is green, but the VIX is still refusing to take the hint. Look at the setup. SPY up about 0.6, QQQ up 1.1%, IWM green too, but VIX is still around 20.33, up on the day. That's the part that matters. When equities are bid and vol won't really break, the market is basically smiling for the camera while keeping one hand on the fire alarm. Here at the macro desk, below 20 is the cleanup line for VIX. If it can't lose that, then this risk-on move is still happening with hedges sitting underneath it. Not a full all clear. Now pull up YJ, because this is the single name version of the same conversation. Not implied vol from an options chain, just raw realized volatility punching everybody in the face. This thing started the session near 1.43, sat around, then broke above roughly 1.40 with volume finally showing up. After that, it stair-stepped into 2.52, and then the tape just went parabolic toward 10.95 with million share candles in the move. That's not normal movement. That's a volatility event. The key read is that the latest candles are stalling near the high after the big expansion. So the question is whether volume keeps confirming or whether it turns into an air pocket. And just to keep it clean, I'm not laying out an options trade here. No strikes, no chain read. This is an educational vol read. Small cap parabolic names can retrace brutally when the crowd blinks.
Thanks. Macro Desk. Markets Desk is back on the movers board. All right, look at this tape. QQQ's got a real bid. Small caps are green, but vol is not rolling over cleanly. So the board is hot, but it's not clean. YJ is still the temperature check. I'm not chasing the headline percent. I'm checking whether the bid is still controlled. ATGL, MB, NAMI, VATE, HCWC, same momentum cluster, totally different quality. MB and NAMI have actual share turnover behind them. ATGL is thinner. HCWC is still a penny stock danger zone. So quick scan first, then we chart the leader. Let's pull YJ up first on the 1 minute. This is the one setting the pace. 1041 on the last board print, up massive, with 27 million shares traded versus basically no normal volume. That's not normal interest. That's a full-blown event tape. For me, the simple line now is $10. If buyers keep defending 10, the squeeze still has oxygen. If it loses 10 and can't reclaim it, that's where the chase crowd can get trapped fast. And remember, we already had that $11 upside line live from earlier. That's not a green light. It's just the spot where acceptance gets more serious. Oof, this is exactly why the markets desk cares about levels, not just the percent gain column.
All right, quick pit stop. This whole workflow the markets desk is using, the movers, the risk checks, the chart tape, that's Pro Terminal. First stop, dilution center. This is where I want eyes on shelves, ATMs, offerings, all the supply risk stuff that can absolutely wreck a clean-looking small cap chart. Not a trade signal. It's the paper trail before you start believing the candle. Now flip back to market movers. This is the heartbeat. Top gainers, top losers, price, percent move, relative volume, float when it's there, boom, all in one board. And look, with SPY green, QQQ green, IWM green, but VIX still above 20, context matters. A stock ripping in that tape is one thing. A stock fading while the markets bid, different story. Here's the part I think people skip, the profile page. Pull up MB as the example. You don't just stare at a green candle and clap. You check filings. You check the recent documents. Then you check insider activity if it's there. Is there fresh paper? Any offering language? Any weird timing? Sometimes the data is thin. Sometimes it's delayed. Sometimes there's nothing new. Fine. But at least you looked before treating a momentum move like it's clean.
Thanks, markets desk. Quick macro check into the 1230 jobs print. Here at the macro desk, the funny thing is equities are already leaning risk on. SPY at 773.24, up 0.61%. QQQ at 722.61, up 1.11%. And IWM at 301.13, up almost 1%. So stocks are saying, yeah, we can handle this. But VIX is still sitting at 20.32, and also green on the day. So this is not champagne and confetti risk appetite. It's more like everybody's at the party wearing running shoes. The headline in about 20 minutes is July unemployment, consensus 4.2%. But the tape will cross-check it against payrolls, consensus 80K, wages at 0.3% month-over-month, 3.5% year-over-year, and participation expected at 61.6. If unemployment says one thing and wages say another, That's where the first macro head fake usually lives. Now look across the dashboard, because this is where the market starts whispering before the number starts shouting. Bond proxies have a little bid. TLT at 82.575, up 0.07%. IEF at 93.12, up 0.18%. So rates are not exactly body-checking equities right now. The dollar ETF UUP is down 0.41% at 28.075, while the yen proxy FXY is up 0.44% at 58.145. That softer dollar setup is giving gold oxygen. GLD is up 2.54% at 399.585, basically knocking on 400. Oil's firm too. USO 119.51, up 0.54%, but it's not the loudest instrument in the orchestra. And then crypto beta is joining the risk party. BITO up 0.98%, Coin up 4.99%, MSTR up 5.57%. So the story is, stocks like the softer rate impulse, gold likes the softer dollar. Vol is refusing to leave the room. When the number hits, I'm watching UUP losing 28, GLD clearing 400, and VIX pushing 21. If those all fire together, the macro thermostat changed, even if the equity screen takes a minute to admit it.
Thanks, Macro Desk. Quick check-in from the Stock Whisperer on the simulated paper book before that labor data window. And just to be super clear, this is the show's paper trading portfolio for the broadcast, not a signal to copy. Right now we've got 3 open positions. ATI is a short, 40 shares, average 225.22. Last print 224.575, so we're up $25.80, about 0.29%. Fine, but not a victory lap. The thesis was earnings shortfall into downside continuation, and it's only barely working. CVX is long 45 shares from 186.955, last 186.72, down $10.58. That oil-linked thesis is still alive, but it's not paying us yet. MSFT, long 20 from 503.90, last 503.10, down $16. The key there is simple. The headline noise hasn't broken our 499 invalidation area, so we're not forcing a decision just because it's slightly red. Now let's flip to the working orders, because this is the part I care about more than the little green and red flicker on P&L. Every trade here has a bracket. ATI short has the buy limit down at 210 for the take profit side, and the buy stop up at 232.50 for the risk side. So below 210, that trade has done its job. Above 232.50, thesis is wrong and the bracket handles it. CVX long has the sell limit at 195.50, stop at 182.80. That gives the oil thesis room, but not unlimited room. MSFT long has the sell limit at 522.50, stop at 499. That 499 level is the one I'm watching, because it's both the bracket stop and the technical invalidation area from the prior decision. Cash is about 76.6K, so the paper account is not maxed out, and that matters into a macro print. We don't need to chase just to be involved. On the watch side, nothing new gets opened here unless the trigger actually shows up. AAPL is still only interesting to me above $316.50. That would be a clean continuation line through morning supply. MSFT below 499 is the failure check. If it loses that, the paper bracket already defines the exit. NVDA below 220 is on the downside watch list, but I need weakness to show up in price, not just in a headline. So the Stock Whisperer plan is boring on purpose. Let the brackets work. Don't add right in front of scheduled data, and grade the trades honestly as they move. Coming up, we'll hand it back into small cap momentum and see if those runners are still holding their levels.
Thanks, Stock Whisperer. Markets Desk is grabbing QNME now, because this one just went full penny stock momentum mode. Green tape behind it. QQQ up over 1%. IWM firm too, but breadth is mixed, and VIX is still sitting around 20. So yeah, risk on backdrop, but this is still a low-priced small cap. Oof, look at that shape. This thing opened around 55 cents, dipped down toward about 52, and then the whole character changed. You get the base in the low to mid 50s, then the breakout candle pushes through 55 with volume, and after that, it's just higher highs, higher lows, higher highs again. The real impulse was from roughly 55 cents up through 80 cents, with some monster 1-minute volume bars in there. That's the part that matters. Not a clean grind. This is a liquidity burst. Day high on the feed is about 84 cents, and right now the chart read has it stalling around 78.79. So for the markets desk, the clean upside check is simple. If QNME gets back above 84 cents and actually holds above it, that's the prior high reclaim. If it keeps rejecting under 84, that's supply showing up. Now, the danger side. The recent candles are not expanding anymore. Volume is tapering on the pullback, and price is hanging below the high instead of immediately ripping through it. That's not bearish by itself, but it means the easy momentum phase already happened. I don't have a VWAP number coming through in this package, so I'm not going to fake one. I'm using the candle structure. Control zone for me is that 78 to 80 cent shelf right here. Lose that, and the next real memory on the chart is lower, back toward the breakout area. The big structural line is 55 cents. That was the base and breakout zone. If QNME loses 55 and can't reclaim it, the parabolic look is damaged fast. And here's why I'm not treating this like some clean large cap breakout. QNME is a sub-dollar small cap, market cap around the teens of millions, and the dilution read is high risk, active equity line, about 25.8 million float, 34.4 million shares out, and roughly 13.4 million raised over the last 12 months. That doesn't mean it can't move. Clearly it can move, but it means overhead supply and financing risk matter. No halt flag in the data I've got, but with a chart this steep, you respect the flush risk. Coming up, we've still got another mover's scan on deck, so we'll see if this stays bid or joins the fade pile.
Thanks. Markets desk, breaking macro wire here. U.S. Treasury yields are jumping on sticky inflation signals. What we know? The desk is seeing yields move sharply higher after inflation data came in hotter than investors wanted. And that's forcing the market to rethink the timing of early Fed cuts. What we don't know yet from this card is the exact point on the curve doing the most damage. 2-year, 10-year, the whole spaghetti bowl. So I'm not going to invent that. The market read is pretty simple though. Higher yields usually lean on longer duration growth assets and lift borrowing cost pressure across the economy. The funny part, if you enjoy dry macro comedy, is equities are still green right now. SPY around 773, QQQ around 722, while VIX is still above 20. So the tape is saying, I'm fine, with one hand on the fire alarm. Next headline, tech stocks dip after a Fed official flags more policy caution. ProTerminal's newsroom has AAPL and MSFT tied to this one, and the reason it matters is valuation math. When policy stays restrictive, the market tends to ask harder questions of the company's price for growth way out in the future. That doesn't mean every mega cap has to roll over. QQQ is still up about 1% on the day, but it does mean the hurdle rate just moved. Here at the macro desk, that's the whole issue. Tech can have great earnings, great AI stories, great margins, and still get bullied by the discount rate bouncer at the door. Third story, oil prices rebound as supply worries mount. The desk is tracking crude higher on renewed Middle East supply risk concerns, and the live cross-asset board has oil near 119.51, up about 0.5%. Why investors care? Energy shares can catch a bid when crude firms, but higher oil also feeds the inflation conversation we just opened with. So you've got the classic macro feedback loop. Oil up, inflation anxiety up, yields up, growth stocks have to explain themselves again. Gold is also bid near 399.6, up roughly 2.5%, which tells you there's still demand for protection underneath this green equity tape. Coming up, Mega Cap Watch should be a good one, because this rates versus growth tug of war is exactly where the big names show their hand.
Thanks, Macro Desk. Alright, Markets Desk is back on the movers board, and this thing is still spicy. SPY's up about 0.6, QQQ's up a little over 1%, IWM green too, but breadth is mixed, and VIX is still sitting just over 20. So yeah, risk on tape, but not exactly sleepy. Top of the board, YJ's still ridiculous, up about 454%, 27.9 million shares, relative volume over 5,000 times normal. Oof. Then ATGL, up 165%, much thinner volume, only about 273,000 shares there. MB is the other monster, up 129%, 26.8 million shares, relative volume over 6,700. That's real attention. QNME still hanging in the top group at 87 cents, and VATE is up 70% with 12.5 million shares. So the job here is simple. Board first, then charts. We're not marrying these things. We're reading speed, volume, and whether the bid is still real. Let's pull up YJ first, because this is still the scoreboard leader by a mile. Current prints around 6.82, still up over 450%. But here's the important part. Our $10 line from earlier got hit to the downside, so the character changed. This is not the clean high day squeeze anymore. This is now, can it rebuild, or is it just bouncing after the flush? Volume is the whole story. 27.9 million shares versus an average volume around 5,000. That's not a normal tape. That's event mode trading. On the 1 minute, I'm using round number structure now, because once a runner loses the big prior level, traders start anchoring to the next obvious spots. $7 is the first reclaim I care about. If it can't stay above 7, the bounce is suspect. Under 6.50, I'd call that another lower shelf breaking. Again, not a recommendation, just the tape map. Fast stock, tiny market cap, medium dilution risk on the board. Respect the wick risk here. ATGL next, and this is a totally different animal from YJ. This is a thin float tech mover, about 1.47 million in the float. Current print right around 19.91, still up roughly 165%, but look at the shape here. The earlier crack under 25 mattered. That was the first downside hit, and now the whole tape is basically asking, okay, is 20 a real base, or is 20 just the next rejection zone? If it can actually accept above 20, hold bids, and not instantly wick back under, then you've got some stabilization. If it keeps losing 20 and snapping lower, that's not clean momentum anymore. That's thin float air pockets. Volume's only about 273,000, so every candle can look dramatic. Watch the spread, watch the reclaim, and don't treat a 165% mover like it's moving normally. Now, MB. This one is the turnover monster on the board. Master Beef sitting around 8.60, up about 129%. But the crazy number is the volume, 26.8 million shares against a float of only about 4.7 million. That's more than 5 times the float changing hands, and relative volume is showing over 6,700 times normal. So this is not a sleepy restaurant stock today. This is pure liquidity event. The levels are pretty simple for the tape. 9 is the reclaim everyone can see, and 8 is the hold you do not want to see give way if momentum is still real. Above 9, buyers are proving they can take back control. Under 8, then you're probably looking at people who chase the move getting flushed. In between, 8 to 9, that's chop territory. Big volume, big emotions, and a lot of traps if you're late. QNME now. Quick check only, because we already did the bigger risk setup earlier. What I care about right here is that 84-cent reclaim. Current prints around 87 cents, so on paper it's still accepting above it, but don't let that fool you if the candles start stacking red right back into 84. This is the classic penny stock line. Above 84, bulls can argue it's holding the prior reclaim. Back under 84, that turns into a failed reclaim and the tape can get ugly fast. Volume's massive, over 41 million shares, so this isn't quiet, but with the high dilution risk already on the board, I'm treating the level like a referee, not a prediction. VATE's next, and this one's cleaner from a price action standpoint than some of the absolute chaos names. Industrial name, Innovate Corp, up about 70%, and the volume is real. 12.6 million shares versus a normal tape that's tiny. Relative volume around 200 times. Current prints 12.64, so we're sitting right in that 1250 to 13 battle zone. If it keeps basing above 1250, that tells you buyers are still defending the breakout area.
But if it keeps wicking into 13 and rejecting, that's where I start calling it exhaustion instead of momentum. So for VATE, I'm not chasing the headline number. I'm watching whether 1250 holds as support and whether 13 can actually accept instead of just spike and fade. All right, last pass here. HCWC first, because this is the penny stock liquidity storm on the board. We're at about 33 cents, up roughly 66%, and the volume is just silly. 559 million shares. That's not normal interest. That's a full-on churn machine. Earlier, that 32-cent area got hit, and now the whole read is super simple. Can 33 cents hold, or does this turn into one of those penny stock fades where the tape looks heavy, even while the headline percentage still looks amazing? And yeah, dilution risk is high here, so I'm not treating this like a clean fundamental move. It's a tape trade, it's liquidity, it's VWAP behavior, and if 33 starts failing on size, that tells you the crowd is getting tired. Now flip to the red side. PN is ugly, down about 60%, trading near 330, only about a million share float, and that matters because the moves both ways can be violent. What I'm looking for on a loser like this is not, is it down enough? It's whether the bounce candles are actually reclaiming breakdown areas or if every pop gets sold into heavier volume. If the green candles are tiny and the red candles keep expanding, that's panic selling behavior, not a real reversal. CVRX, same idea, different sector. Medical device name, down around 57%, but with over 7 million shares traded and relative volume near 22 times normal. So again, dead cat bounce versus actual stabilization. If it keeps failing the reclaim attempts on the 1 minute and volume stays heavier on the downticks, that's still distribution. If the selling volume dries up and it starts holding higher lows, then at least the tape changes character. Good movers scanned, crazy upside names, nasty downside names, and coming up we'll hand it forward and tighten the focus off this board.
Thanks, Markets Desk. Quick check-in here at the Stock Whisperer on the simulated paper book. We just added NVDA long, 50 shares, average 222.45, and it's basically flat right now at 222.47, up about 90 cents on the position. The setup is simple. Fresh multi-billion-dollar AI infrastructure catalyst, QQQ leading the tape up about 0.8, and NVDA holding that 220 support zone. That's the thesis. If 220 starts failing, I'm not going to pretend that's fine. The bracket is already defined. Stop at 218.80, take profit order up at 230.40. Again, this is the broadcast paper portfolio, simulated account, not something to copy. Rest of the book. ATI short is now working against us, short from 225.22, trading 227.96 down about 109 bucks. That one only stays clean while it's under the 232.50 stop. CVX flipped green, long from 186.96, now 187.38, up about $19, bracket still 182.80 risk, and 195.50 reward. MSFT is slightly red, long from 503.90, now 502.66, down about 25 bucks. 499 is still the line where that long thesis breaks. Cash is sitting around 65.5K. On watch, I've got AVGO above 425 and AMZN above 278 for AI theme confirmation, but with the labor data window right here, I'm letting the brackets do the work.
Thanks, Stock Whisperer. Let's hit Google fast on the daily. This is the Markets Desk, and oof, this is not acting like a leader right here. QQQ is green, up about 0.8, but Alphabet is red by roughly 0.6 near 355. That matters. Daily chart is a base, not a breakout. You had the big run, then the sharp correction, now it's chopping around this 350 to 358 box. The 50-day area is sitting right above price, around 35.66, 35.7, and that 358 zone is the line where buyers have to prove it. Under 350, the base starts looking tired again. So for the daily, 358 is upside control, 350 is the floor. Clean. No need to overcomplicate it. All right, let's drop down to the 1 minute. Look at this. Early push from 354 and change up into 357.38. Volume actually confirmed that move. Spikes over 80K shares. Then it just went sideways. Range tape. But now, last few candles are leaking from 355.50 back toward 354.70. And the selling volume is picking up a bit. So intraday, I'm watching 357.40 above for a real reclaim, and 354.20 below. That's basically the low-end trapdoor from the open. Also, jobs data hits at 12:30, so don't be shocked if this thing wicks both sides. VIX is still above 20. Coming up, we've got small cap momentum, but for Google right now, lagging the Q22. Stuck in the box. VSA's on the move. Let's get on the 1 minute. Watch VWAP. Watch the volume on the push, and watch for halts. The question on a low float runner like this is always the same. Is this a real breakout with volume behind it, or a trap that fades the second the buyers dry up? Low float names carry halt, dilution, and pump and dump risk. This is about reading levels and risk, never chasing.
All right, quick news check. Here are the headlines moving markets right now. NVIDIA secures a multi-billion-dollar deal to supply AI infrastructure to ChatGPT maker. NVIDIA has landed a multi-billion-dollar contract to provide AI infrastructure to the maker of ChatGPT, highlighting NVIDIA's dominant position in the AI hardware market and signaling a potential significant revenue boost. Why it matters. This deal underscores NVIDIA's critical role in powering AI growth, which could drive further investor interest and support the company's valuation amid AI sector expansion. Broadcom stock leaps on surging demand from Google's AI build-out. Broadcom shares jumped as demand from Google's AI infrastructure expansion accelerates, positioning Broadcom as a key hardware beneficiary of growing AI investments. Why it matters? Broadcom's exposure to AI infrastructure tailwinds could support its revenue growth and market positioning, reflecting broader tech sector AI-driven momentum. Amazon outlines up to $50 billion investment in AI and supercomputing tied to U.S. government work. Amazon announced plans for up to $50 billion in investments in AI and supercomputing infrastructure, linked to contracts with the U.S. government, signaling strong long-term cloud infrastructure demand. Why it matters. This massive commitment highlights government-driven demand for cloud and AI infrastructure, potentially boosting Amazon Web Services' growth trajectory. Mixed analyst actions for Microsoft and Amazon as parts of AI-heavy baskets face downgrades. Analyst ratings on Microsoft and Amazon show a mix of downgrades and cautious views despite their strong AI exposure, reflecting investor wariness about valuation premiums in the AI sector. Why it matters. This signals some investor caution on AI hype, suggesting that while fundamentals remain solid, valuation risks are prompting more selective positioning. Applied Materials raises full-year outlook after better-than-expected earnings. Applied Materials reported stronger-than-expected earnings, driven by robust semiconductor equipment demand, leading to an upward revision of its full-year guidance. Why it matters. The resilient demand in semiconductor equipment suggests ongoing sector investment despite macro volatility, which could benefit suppliers like Applied Materials.
All right, that's the hit from the market's desk. SPY and QQQ green. VIX still sticky. Small cap tape still wild. Keep those flagged levels on the board. We'll catch the next setup.